Oh, thank you. Want to say hi? Hello. He's looking this one. That one right there. Say hi right there. You want to say hi? Say hi, buddy. Hi. We're about to talk about the stocks and the Bitcoin and the roller coaster. What do you think about the Bitcoin? Not sure what to think about the Bitcoin. What about the where's Roblox stock? Do you want it to go up? What about you, Jack? You want Roblox stock to go up? Yeah? All right, buddies. I'm going to pass her off to you, okay? Thanks so much. We'll see you later. All right, welcome back, everyone, to another Stonk live stream. Would you mind closing both doors for me? Thank you. Welcome back to another Stonk live stream. Today, we've got a little bit of volatility out in markets. Just a wee bit of volatility, given that you've got, well, NVIDIA down a lot. You've got Tesla down about... Could you close both doors, please, Chuck? Yeah, but then please close both doors, just because I can hear them. And so what we've got today obviously has to do with Google and the potential commoditization of TPUs. We talked about this yesterday. Google actually dumped at the open, which I thought was very interesting because you have so much enthusiasm for Google recently post the Gemini launch. And you've got this immediate sell from institutions. My take is, retail looked at Google and said, oh my gosh, this is the next, NVIDIA. And people are flooding in to Google stock. And, institutions are like, you know what, we've made a lot of money on NVIDIA. We made a lot of made a lot of money on Google. Let's go take some profits on, frankly, both of them. And so at the open, you saw quite a little bit of a tank here. Now, the question is, will that institutional selling continue? That's a potential risk factor here. If this institutional selling continues on NVIDIA with, potentially its worst day in 7 months here, and then maybe you even get Google that turns red by the end of the day, the Qs will be more than 1% red. We'll be down at the 595 level by the close. And then what we'll be looking at is, great, bad jobs data on top of that. It's not great. I don't think AMD losing 200 is exactly desirable either. So hopefully we can slowly recover from some of this. We get some, maintenance around Bitcoin, maybe back to 88. Get the Qs. It'd be nice to get back to 607 today. Get about 5. That's right. Got about $5 to go to get there. So less than 1% would take us getting green and then maybe going positive by about, 90 basis points or so should get us there, which would be really nice. We'll see if we can do that. We are facing, obviously, this morning, rough consumer sentiment numbers. Not that I think those horribly matter. I think those are pretty boring. And markets usually don't care that much about them. See you, Jack. And consumer confidence, not sentiment, that is. And then, of course, you have this this jobs data this morning, which, we're now getting jobs data at 4 times the pace that we used to get jobs data because we get this weekly 4-week moving average. And so far, it's not getting better. It's worsening, right? Now that has good news and bad news. The good news is yields are going down on bonds, which is great. It's great for real estate. It's great for bonds. It's, broadly great for financing. And it's also great for mortgage plays. Rocket Mortgage is skyrocketing. This morning in our alpha report, we were talking about a lot about, the Bitcoin precedent for potentially what direction we were going to go today on the Qs, lines to watch, the CoreWeave impact, and then later we got to talking about the impact of this rate decline, how long we might see this rate decline momentum, what date this could be a play to. Because, I think it's nice to say, hey, something's going to trend up, but I think it's also useful to say, hey, just be careful. There could be a certain date where that trend up ends. I think there's still some time on the mortgage plays, which is nice. But I will say CoreWeave right here, I'd really like to see it regain 68.47. We've rejected it once, almost twice now. We're still sort of in that second rejection now. Hopefully we recover this on CoreWeave. You really don't want to see these AI component plays sell off. AI component plays selling off is really bad for new financing, which is just not great. So I'm a little disappointed to see the pain that CoreWeave has been through. I'm not exposed to it, so it doesn't matter in that sense. I just see it as more as almost an early systemic component, because I see it as a peg leg that helps prop up, well, frankly, NVIDIA, and losing that peg leg is bad. So yeah, not great, but as we say, not great, not terrible. All right, let's go pop up some news. Let's see what we're cooking today. All right, so where do we stand today? Well, we've got the 10-year yield at 4.011. I've got gold at 4.127. I've got oil. Wow, dude, Brent's about to go under 60. Brent going under 60 is a little recessionary. Not great. We're not under 60 yet. WTI is under 60. That's the Western blend, the American blend. Brent, the international blend here at 61.8. Wow, we are knocking on the door there of going under 60. So September core wholesale prices rose less than expected. Woo. Yeah, I mean, I generally don't even look at the PPI. Some of this data that's still dated from September. What really matters to me is the forward guide, or whatever leading data we can hopefully get, as much of the data is lagging on jobs or otherwise. So the big issue here is let's see, do I have a login for this? I don't know if I have a login for this. I thought I had a login for this. I'll go look if I have a login for this. But anyway, big risk here is, oh, I do. Yeah, there we go. All right, so what do we have here? This was the JP Morgan warning. JP Morgan, head of research, highlights several risks Wall Street faces. Investors remain constructive on the economy, blah, 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 blah. Yet risks include a durable shock to the supply side from the cyclical weakening of the labor market. Okay, cyclical weakening of the labor market. I mean, we all know that's the biggest issue right here. Tariff revenue, China relations, midterm election. Oh, come on, dude. That's basic. That's a dumb article. All right, fine. So yes, we know cyclical weakening of the labor market. That is a big issue. We're well aware of that. And we are well aware as well of this 13,500 job decline over the last 4 weeks. And it's a 4-week moving average, so it does smooth it down a little bit. Look at this. Sellers are taking their homes off the market at the fastest pace in nearly a decade. Well, this is a horrible time to sell around Thanksgiving. Come on, man. Roughly 15% of homes were delisted in September. Oh, this is old data. Redfin found 70% of homes listed in September were on the market 60 days or longer. Supply of homes is 15% higher than it was a year ago. Home in Hercules, California. Oh, that's cute. That's this is new construction. Well, first of all, this is actually kind of interesting too. They made such narrow roads that they put the parking spots like this on the side. I mean, that's convenient. I would like a parking spot like that. That's kind of nice. But yeah, good luck fitting 2 cars on there on trash day. There's the model home with the buildings. The fence is brand new. All the plants are brand new. They put the minimum solar panels required on each of the homes, which I think is 5. So yeah, nice new construction neighborhood. Cool. So weak demand, weakening home prices overall, blah, blah, blah. Man, this is all old data, bro. September? Come on, man. This is why I say, don't look at this real estate. This is part of the reason why we want to do, we can't wait to launch our real estate AI. Because real estate data, man, the data they give you is crap, man. It's so freaking lagging. It's so bad. Here we are. We're about to be in December, and they're talking about September data. It's crazy. Anyway, look at this. Nice recovery on the Qs. So 607 is really where we want to go today. You've got Google, Google, NVIDIA still suffering a little bit. NVIDIA starting to recover. AMD starting to recover. Okay, here we go. Can we get Meta up? Yep, Meta's continuing its recovery. Netflix is still getting left behind on the mags. That's okay. Create some buy opportunities. And let's see here. Okay, so we'll keep an eye on it. And then SoFi 2750, nice. All right, let's keep going with the news. Let me also see what the students are saying quickly. And where are we in terms of Fed cuts? We'll write down some data here. All right, let's go see what we got. So, refreshing over here. Yeah, about 79.4% chance of a cut right now. So, let's just make some notes here. Fed, 79.4% chance of cut. ADP, 4-week moving average, negative 13.5K versus negative 2.5K last week. So deterioration continues. Okay, not great. And what else are the suits saying? Consumer confidence sags. Yeah, but people are pissed, right? We know that. So consumer confidence was 88.7 versus 93.3, lowest since April. That said, the labor differential remained in line with the trend of the prior couple months. There isn't an obvious collapse in labor conditions yet, right? That's the only thing keeping yields, I think, up right now, is that we're not seeing that collapse yet. So lack of labor collapse still keeping treasuries elevated. Treasury yields. All right. So let's see here. What's pretty fascinating? Winners and losers. NVIDIA, Microsoft, Amazon. Biggest winner, Alphabet. AI investment boom. Creative destruction. Economic cycle. What is this nonsense? Productivity growth. Blah, blah, blah. Okay, that's boring. Risk assets, fine. Support after opening drop. It's true. We did bounce pretty quickly at the open, which is good. Okay. Rate cut bets are rising after the data. Yep, we know that. Okay. Boring. What is this? Increased spending. Yeah, retail keeps spending. Alibaba's sales beat supports Asian AI stock momentum. Alibaba AI-driven earnings should give Asian tech some momentum. Oh, that's cute. And then, of course, we had the ADP data this morning. Okay, good. All right, let's see what else we got here. Hey, look, it's Sarah. Hi, Sarah. All right, where were we? So, let's see here. All right, we got 4 contenders to succeed. Tim Cook, Ukraine peace deal, German, blah, 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 Trump supply side solution. Google soaring stock is defying fears of an AI bubble. Johnson warns the GOP is wary of Trump's healthcare plan. Home sellers, these are price cuts when home sellers set prices too high. I'll slap that over here with the other real estate article we had. Yeah, there it is. Okay. So what is this? List them high, watch them die kind of thing? You know that's the saying, right? The agents often get hired by who pitches the seller on the highest potential sales price, not by reality. People love getting misled. And so there's a famous saying, list them high and watch them die. Overpriced homes are languishing on the market as buyers continue to be deterred. Many sellers optimistically price their homes based off sales from the early 2000s. Deputy chief at the NAR's collaborating, blah, 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 blah. Share of active home listings with price reductions. That's pretty thick over here at 25, huh? That's nice, but it's not like substantially beyond norms. It'd be nice if they showed like 2008. That'd be nice. So let's see here. Sellers can't stomach the price cut. Take the home off the market. Blah blah blah. No comments? Oh, come on. I want to see the comments section, man. It's always entertainment. It's like free entertainment. The Wall Street Journal comment section. All right. Wow, they got the last one. No way, dude. Somebody says a 1450 square foot home just sold around the corner from me for 2.4 mil. Cool, man. Where is it? San Jose? Or San Francisco? All right, French authorities said they detained 4 more people. Wow, they got him. Including a man suspected of being the only thief expected to remain at large. Wow. Paris prosecutor Laurent Bacau said 2 men and 2 women have been taken into custody. Bacau said all 4 came from the Paris region. Wow. Man, I want to see the mug shots. Somebody goes bingo. oh, as in like bingo. Okay, you were the real estate one. Oh, okay. In terms of the location, yeah. I actually think that's a good market. I like that market a lot. I know that sounds expensive, but it's a good market. Beats the Palo Alto pricing. You'd 1450 square feet, you pay 5 mil. You pay twice as much. You move a couple zip codes over, the price doubles. All of a sudden 2.4 million looks like a discount. Let's see. Amazon wants to sell you a car. I mean, if Carvana can do it, Amazon should just buy Carvana. That would be very interesting. Well, I guess they're already doing it. Estimate payments. Wow, right on Amazon. Well, that's kind of cool. I wonder if they deliver it free within 2 days. Purchases of over $10,000 account for less than 1% of transactions. Only 10% of people make a purchase of $1,000 or more on Amazon? What? I thought that... Okay. Hottest sellers, handbags from Louis Vuitton, Gucci, and Saint Laurent. That's cute. Hyundai, which has been selling cars on Amazon since December, said nearly all the people browsing were new to the brand. Around 40% of them were more likely to consider Hyundai once they learned about the tie-up with Amazon. So 60% were not? Well, maybe I don't fully understand that one. Man, I hope so. If Amazon sold Ford vehicles around invoice price, I'd buy a new truck tomorrow. The dealer dance has kept me in my old truck for years. I hate that too, dude. I agree. It's like, just list the damn price and just stop all the bull crap. It drives me nuts. I hate the whole... Like, I like that Tesla doesn't do it, It's like, so what's the price, dude? So I can make a decision. I don't have time for this crap. Russia signals it could reject the modified plane. What? No shit, dude. Dude, Putin's so unserious. And it's because he's playing Trump, man. All he's doing is kicking the can down the road. He's buying time so Trump doesn't give him tomahawks. It's... Dude, Sarah's got 2 coffee cups again. Let's freaking go. Wait. Mexico CEO. Put Sarah back on, damn it. We'll come back. We'll come back. 2 coffees. I got 3 on my desk today. 1 up, baby. 1 up. I got her. Huh. All right. Let's see here. All right. Are we still surviving in the stock market? I mean, floating. They all float down here. Who knows what that's from? Okay, at least CoreWeave popped back up a little bit. All right. Man, look at MSTR, huh? They've just had a ride, dude. They just had a ride. All right, so what do we got here today? What are our mugs today? Let's go through our mugs. Oh wait,
Is that true?
Yeah, well, everybody has its hubs. I mean, our home is Mexico's.
oh, all right, I'll finish that part. Well, today we got Tarzan. Matches the background a little bit. Look at that. Disney Tarzan 2025. You know, if you look at the bottom, it says goes woke. All right, got it. Then we got Mexico. The Mexico mug. All right. Okay. Had to smuggle that one across the border. And then we got the Lego Man. Cool. So yeah, 3 mugs. All right, so where are we? Yeah, MicroStrategy, man. Wow. Just talk about like negative momentum, man. And it's just like, it's getting worse. It seems like it's almost accelerating the sell-off. I mean, you can see obviously the sell-off started over here, negative 2% day. Here was a negative 9% day. You know, so I mean, this was quite a move over here from 450. From 450 to 300 took 450 to 300 took 3 months. 300 divided by 450. We lost 34% in 3 months. That's about 11% per month, right? Okay. But since October 31st, we have lost almost 50%. 172 divided by 300. Holy smokes. Wow. We gotta write that down. That's actually very interesting. So, let me see if I remember this right. July to October, MSTR minus 34%, roughly 11% per month. Okay. November, so 3 months. 3 months. November, not even 1 month. MSTR minus, what is that? 42.7% more. Ouch. That's crazy. The sell-off is accelerating, is basically, right? Like the rate of that sell-off is going faster. So let's see. I can make a little note of that. I think we probably visualize it. From here, let's go. See, I'm really good at like design. Not. There we go. Okay, so basically from here to which candlestick is it? It's the 300 line. So right about here. That was minus 34%. And then this section right here, we'll make it orange. And then we should make that yellow. Yeah. How tweets are born, baby. Minus 42.7%. Yeah. Elon's going to help me get a whole 20 views, baby. Nobody takes care of your boy, me, Kevin, like Elon. Maybe Chamath. Oh, wait. He blocked me. Chom's back! All I did was ask them why you paper-handed Virgin Galactic. That's all I wanted. I just wanted a reason. That's all I wanted. I don't know. MS MicroStrategy sell-off accelerating. Okie dokie. See how much hate that one gets. The haters. That's like when I posted this clip. I was mentioning this morning. I posted this clip about the NVIDIA circular financing where I do the car dealership example where they're like, we will help your income go up. People got so mad. And I'm like, tell me without telling me how many NVIDIA shares you have. Oh, man. Anyway, Tesla, come on, baby. Back to 414 would be nice. Wow, Rocket Mortgage up 69. 6.9. And Corey's at 69. Okay. All right, let's go see what else is news out there. Probably 2. Right? That's honestly, you're probably right. I feel like the most vocal people of a stock have the few.
Off as we're glued to this move, Deirdre.
Yeah, so Sarah, here's why this deal matters. It's because Meta is one of the biggest GPU buyers in the world. So if it is exploring billions of dollars worth of TPUs, Google's custom chips,
that's boring. Sorry, I thought I saw something. Anyway, yeah, it's the people with the least exposure are like the most vocal about it. It's crazy. So, all right, Putin keeps playing Trump. Here's a guy one-handing a 55-inch Vizio TV. You know, that looks impressive, but the guy's literally holding a $1.99 product. They're literally selling those for $1.99 right now. It's wild how cheap they've gotten. Let's see here. U.S. sales slowed in September. Oh, that's a surprise. That is actually interesting. Sales rose 0.2% in the month. A market slowdown after months of spending. Well, this is the other thing that, you know, there was so much pre-inflation buying. Like pre-tariff buying. Everybody's like, you better buy now because the tariffs are coming. You kind of artificially ramped this this retail sales momentum. It's wild. But let's go look at the economic calendar. So economic calendar has us at retail sales. Yeah, we missed quite a bit, actually. Let's go write down these retail sales numbers. So we have the data over here. Retail sales miss. And then let's jot these puppies down. So we were looking at advanced month over month 0.2% versus 0.4 expected, and down from 0.6% prior. Okay. Then I've got retail sales ex auto at expectations though. So auto was weak. Okay. Ex auto month over month 0.3 versus 0.3 expected. Prior revised down 0.1. Suggests auto weakness. That's not a horrible surprise at all. That's understandable. Ex auto and gas. That's weird. Did gas prices go up in September? Did gas prices go? Does anybody know? Did gas prices go up in September? Let's just go look at what oil prices were. Let's see. Oil. My understanding is everything's been going down, but oh, yeah. Yeah. Wow, are you kidding me? Gas prices went up in September. Oh my Lord. Oh, that's fascinating. Well, this is the chart of oil, right? But let's make a note of this because this is going to help us understand what's actually going on here. So this is, let's just mark where September is. So September, can I get like a vertical line? There's no way, I wish it would snap to vertical, these stupid Apple lines. So I have to cheat. I have to find something that's vertical. There you go. Okay. There we go. Yeah, so you did get an increase. Okay. So gas prices did go up, which that's going to have an impact on this next data point that I'm going to give you, but it'll give us a little bit of color on into the consumer. So bear in mind, my take is people spent a crap load after tariffs were announced because many companies said, get in now before we actually have to raise prices, right? That might be slowing now, slowing down. That's coming at a bad time. That's coming as labor continues to weaken and debt financing for AI might be getting more challenging with the, CoreWeave and NVIDIA drops. Something to consider. But anyway, if you look at this data, I'm going to show you this. X, auto, and gas, month over month, came in at 0.1% expected. Prior, revised down 0.1%. So this doesn't suggest auto weakness. It actually suggests gasoline strength, right? Because removing gas and autos, retail sales still missed pretty decently here. And then retail sales control came down negative 0.1. So absent higher gas prices, this would have been a miss across the board. And, gas prices obviously since have come down more as oil's falling. But that's not great. Okay, so let's actually go look at the retail sales report. Retail sales report. Come on, homie. Load it. It's so hard. Why is it so hard to load census.gov? Did it get defunded? What did we defund the census.gov because they came out with a bad report? It's gonna defund it all. Like, the Democrats wanted to defund the police in 2020. No, reasonable Democrats didn't. And now you have Donald Trump who's defunding the government. The whole government. Here we go. Look at this website. This website's like crap. U.S. Census Bureau is updating its economic indicator release calendar. Right. May as well say in coordination with Trump. Okay, buddy. Thanks, Trump. Well, Kevin, nobody knows how to rig it better than I do. You might be right, Donnie. Yeah, what can I say? Okay. All right, let me download this puppy. Download the retail sales report. Kevin, you're so immature. Did you just realize? Census, retail sales, 1125. 1125, I feel like it should be Black Friday today. All right. Let's pop this puppy up. Oh, man. Oh, boys and girls. We're going to look at the data. Yep. One sec. Okay. Sorry. I had to beam that out. All right, boys and girls. Oh, wait. Hold on.
Yeah, no, and the markets.
Damn it! Okay. All right. So, U.S. Census Bureau announced the following estimates of retail and food services sales for September. I don't care. Just give me the components. Here we go. All right. So, let's go figure it out. Here are the seasonally adjusted numbers. So, this is like adjusted is basically fraud, and the non-adjusted is fraud light. So, we're going to compare fraud and fraud light. So it's like fraud and Temu fraud. All right. So we've got a slight increase in retail food and services. That's likely that's the gas part. Barely though. Total. Oh, that's excluding gas stations. Is that one right there? Okay. So excluding gas stations is that one. Including gas stations. Yeah, it's right. That's what we thought. Okay, gas. Furniture. Let's see what happened here. Furniture on a seasonally adjusted basis, that's a tick up. We've got motor vehicle parts ticked up. Anything declined? Electronics. Oh, that's interesting. And appliance stores. That was a decline on the seasonal. Any other declines here? Clothing declines. Yeah, we'll tell that to Hollister. They did great. Sporting goods, that declined. Well, it's not summer anymore. Well, it's seasonally adjusted after all. And then non-store retailers. Wow, that's online. Online actually slipped. Yeah, and it slipped in the non-adjusted numbers too. Wow. People spend less online. Now that's a shocker. Dude, general merchandise got whacked on the non-seasonally adjusted. On seasonally adjusted, it's fine. No change on seasonally adjusted. Totally whacked on this. So there's some kind of seasonal element there. But both seasonal and non-seasonally adjusted, online retail going down. I don't know, man. I'll write that down. Online retail down in retail sales data, both seasonally and non-seasonally adjusted. I just can't get over the fact that you could get a 55-inch TV, small note, wild that Target will sell you a 55-inch TV for $199. Similar 4K size on Amazon is, $349 or $329. Not sponsored. I just think Target is scrambling to get people back in the store, right? Because they've had such an oopsie doopsies on their pricing, right? So CoreWeave keeps going here. Okay, somebody donated DKKs. Oh, well, that's nice of you to donate. What'd you say? So you are the legend, bro. Oh, that's sweet. Thank you. Can I heart that? Uh-oh. How do I heart it? Who's DKK anyway? I can't press the like button. That's interesting. Oh, well, maybe that's the little heart. Okay. All right, whatever. I did my best. I tried hearting it. Thank you. Appreciate you. Somebody here says something about German stuff. German BIP plus higher institutions, but lower exports. What's an institution? Is that like a mix between investment and prostitution? I haven't heard those two words mixed together before. Anyway. Donkey Kong? Donkey Kong Kongs? Danish kroner? Ah. I want to go. Can they give that to me in that actual currency? I was going to give Jack, what was it? It was like I think it was Thai or Vietnam. Oh, I think it was a Vietnamese $20,000 bill. And I'm like, Jack, you want $20,000? And I show it to him and he's like, yeah, I want it. And he's like, what the hell is this, Dad? And I'm like, whatever. I think it was Vietnamese. Vietnamese. And then he looks at me and he's like, Dad, this is going to be worth less than $1. I'm like, what do you mean? It says 20,000 on it. He's like, I don't want it. And he walks away without even knowing what the value of it is. Little did he know it was worth a whole 71 cents. Yeah. All right. Damn it. I couldn't get him. Anyway. All right. So, what's the FT got? Census Bureau, blah, blah, blah. All right, let's listen
to the odds of a December rate cut. CNBC senior economics reporter Steve Leisman is with us now. So now the Doves are speaking out after the Hawks had their turn.
Yeah, we had a whole week of hawks, but the ever-changing wind, Sarah, of the Fed's December policy debate look now to be blowing more decisively towards that rate cut in December, despite the possibility of a significant number of dissents. Comments by leading Fed officials and reporting by CNBC suggests the Fed is, on balance, more concerned with a weakening jobs market than it is inflation running too hot. New York Fed President John Williams making clear he supports a near-term change in the policy rate and that he has more concerns with jobs than the upside risk to inflation. And as he has done repeatedly since taking office on our air and elsewhere, Fed Governor Stephen Myron in a Fox Business interview this morning advocating for quick and deep rate cuts, saying the weak job market results from tight Fed policy.
Now that sounds like a video I want to watch.
Minneapolis Fed President Neil Kashkari, not a voter this year, saying he supports the Fed helping the jobs market, but noting that cutting rates won't solve the bigger problem for most Americans, and that is inflation. Several voters on the committee have either opposed a cut outright or...
All right, he's reading his little script here. We're going to go look. I want to see Myron. Let's go find Myron. All right, Gingrich, big warning. Oh, yeah, we want to hear from Newt. Where's Myron? Where is he? No Myron talk. Fox, Myron, rate cuts. Ah, here we go. I got it. Oh, yeah, look at that. Look at that. That's the face of rate cuts right there. Oh, man. Oh, yeah. Bigly rate cuts. And we'll watch that in a second.
How else are we going to figure out what the Fed is going to do? The whole reason that there's uncertainty about the rate cut is because several members don't want it.
You know, Sarah, I think people forget the bad old days when we had no idea what the Fed was going to do, when we complained about how mercurial and opaque they were, and we had no idea what was going on. And
they're a lot more communicative now. I mean, it's much more like we're not going to get rugged. Typically, you know, they guide us with what their intentions are pretty well. Somebody says, any news on Lulu? Well, to understand what's going on with the Lulu move, you need to look at Abercrombie. You know, their sales smashed. You know, I wanted to see some smashing at American Eagle. I once again went to another mall. I took Jack to Red Robin. And I'm like, Jack, let's go check American Eagle. Because at American Eagle, maybe we'll get to take a photo with Sydney Sweeney. Did I get to take a photo with Sydney Sweens? No. I don't know why they don't have posters of her. I really don't understand. But to me, it seems like a no-brainer that you would have like literal cutouts of her. Like you should have one of those boards. The cardboard board things, and she's got like her arm out like this, and then giving you like the side eye, the Sydney Sweeney side eye. Just like, you know how many dudes would go to the store? Come on, man, it would go viral. Like she already went viral enough. Pump it. Anyway, I guess I should provide receipts. So here are the receipts of us at Red Robin. What's actually really interesting about this picture right here is you see this table right there? That is table number 10. And do you know why I remember table number 10? It's because that is where I sat. Right here is where I sat. And my manager sat right here. And I'm like, I need to be a server. Otherwise, I'm going to become a real estate agent. And he's like, you ain't going to make it. And then I'm like, peace. That was the table. All right. So where were we? I think we're going to look at Myron. We'll look at Myron in just a second. Okay. So what do we got here? 10 billion and counting. Trump administration snaps up stakes in private firms. Cool. All right. So Bondi vows to appeal dismissal of Comey and Letitia James. Russia. It was a witch hunt. They came after me. And if they come after me, they'll come after you. Buy my crypto, World Liberty Financial. Sponsored by the Saudis. By the way, we're going to have one of the greatest resorts in the Middle East ever. But we'll start with the Maldives. Nobody will have a better resort in the Maldives than the Trump family. Oh, Trump, don't you think it's weird that your family is profiting off yours? I don't know what my family is doing. I hope they're doing well, but I don't know what they're up to. Oh, okay. All right. Yeah. It's just comedy. All right. Oracle Link borrowing. Binge worries the lenders. The lenders are getting a little nervous. Okay. Data center developers are taking in billions of construction loans. Well, we already know that. It's all debt. All debt. Somebody says, how many famous investors and CEOs have blocked Kevin? All of them. It's a conspiracy. They're coming after me. They don't like the truth. Construction lending was a relatively sleepy corner of Wall Street until Oracle stepped up to become one of the OpenAI's biggest cloud providers, leading to a flood of debt to help build new data centers. This is the bad part of the cycle. Who is the guy? Oh, Lanning. Yeah, I just want to be clear. I won't ever Lanning myself. Lanning, USR. Image. Where is the glass? Oh, they don't have a picture of it. Anyway, those who know. Okay. Companies building data centers for Oracle have borrowed at least $65 billion this year, right? That's more than a third of the financing expected this year. A figure also includes debt backed by mature facilities that are past the construction phase. Right, debt backed by mature facilities. This is a mature one, boys. The wave of borrowing tied to Oracle is raising concerns that they're building up too much exposure to one company. Construction lending could become a bottleneck in the race to develop computing power. Yeah, sure, especially if stocks go down. That's why I'm saying CoreWeave needs to be above that 68 level, which it's all recovering right now, which is good. It's still a crap day. You know, it's like, hopefully we can keep grinding higher. Oh, here's Grinder. But, where's CoreWeave? Here it is. Yeah, good. Like, you don't want it to be under 68 because then the peg leg of the whole ecosystem collapses. So that's not good. Okay. Oh, glad to hear that, Dustin. Dustin time. Okay. These loans, which typically cover the initial cost to build data center, are dominated by big risk-averse banks and asset managers. The loans are typically paid off, right? Worry about overexposure to Oracle. That's the concerns in the market about cloud computing aggressively expanding. Right. Stargate. That's a nice little chart on Stargate. Lending hasn't slowed much. Right. And that's good because once lending slows, that's a problem. Trump to meet soon as possible. Zelensky wants to meet Trump as soon as possible. Yeah. I gotta work on with the Zelensky accent. Donald, we can't give him this land. Are you not grateful for the fighting we've done? Have you not said thank you to us yet? I gotta work on that. There are signs of caution, including higher interest rates for debt linked to the CoreWeave deal. Right, especially as the stonk keeps going down. Developers have outlined plans to quadruple the data center exposure for gigawatt power. Okay, whatever. JP Morgan. Well, we know JP Morgan's a great rug puller. Japan's Sumitomo Mitsui. Sumitomo Mitsui. Hiya! The total raise for the Oracle data center is likely higher because developers don't always disclose the identities of their tenants. Fitch Ratings last week warned that cloud contracts from AI companies are causing heightened consumer concentration and counterparty risk. Right. Oh, did somebody give us a juiced clip? A juiced clip? Watch the close today, folks. Like, write this down. Watch the close today. Because if we end up getting profit taking into the close, you know, it's not like you're going to have good Google News again tonight. This is not great. Kevin, don't click links. There are phishing links. Do not click on links. Oh my God, he clicked on the link. What a dumbass.
Corruption is not bad. Corruption is only bad if I'm not involved.
Yes. Dude, that's a good one. Wait, that's got to be like dubbed or something. Most honest politician. We got a truth-speaking politician before Grand Theft Auto 6. Bro, we need to add that to the soundboard. It's so good. Oh, damn it. Why did you send me that link? YouTube download video. Is it really real? Does he not understand English? Oh my gosh. It's so good. We're going to download it right now. Can it download faster, please? Oh, it's letterboxing. Oh, not the letterboxing. Sorry. That's a long ago reference. Trump. Okay, this is so old. We already know this. That's all the Politico has on their front page? Jim Justice? Is there seriously somebody named Jim Justice? Freshman senator has long been dogged by reports of financial troubles. Senator Jim Justice. That's a badass name. Mr. Justice. We're going to sentence you to justice by forcing you to pay $5 million of back taxes. The Justice Department has sued Mr. Justice to bring him to justice. Dude, why is this stuff so freaking ironic all the damn time? Like, I don't get it. It's always like that. I don't know. Missing. Download the freaking video. Whatever. All right. I don't know what else is going on. Consumer sentiment dims. Dims on anxiety. Right. Guys, there's not a problem. The light's just dimming a little bit. Okay? He's not retarded, he's just dim. It's the PC way to say what's going on with the economy. It's not a falling or crashing economy. It's just dimming. Yeah. Google, the sleeping giant, now fully awake. Private credit sketchy marks gets warning shot from top Wall Street cop Oh, Jay Clayton, talk dirty to me. Jay! Wasn't he the Trump 1 SEC guy? Jay Clayton. Dimming light bulbs are more expensive. Yeah, and if you use the wrong dimming light bulbs with an LED, like with a dimmer switch, and you have like non-dimmable LED bulbs, they're a pain, man. And you just get the what's it called? Epileptic seizures. American Attorney, SEC from 2017 to 2020, nominated by Trump. So Trump's homie Jay. Yo, what up, JC? All right, JC, what do you got for us? What are you bitching about? Oh, there he is. Look at that. Jay. Let's see. Video title, SH9TB Dimmin. Yeah, exactly. Wall Street's top prosecutor has a warning for the private market players getting creative with their numbers. Stark divergences in how competing firms value private assets in their portfolio are drawing increasing attention from market participants. There are definitely some areas of concern in private markets. People should know that financial regulators and the department are looking at those. Of course, Donald Trump has fired half of them, so we have half as many people looking. But we're looking with what we have left. Private equity firms have faced increasing questions over the value of their portfolio. Private credit has swelled, but the rush to offer credit has started to show cracks. Amid mounting competition, alleged fraud, and a growing body of evidence fueling concerns that funds use various methods to assign value. That's a scam. The mark to myth. We don't mark to market, we mark to the myth. Clayton says, he who won't stand for is money manager cherry-picking prices. Money managers cherry-picking prices to reap higher fees. Oh. Guys, it's not a bubble. Keep paying us our fee. Okay, Clayton. Clayton, at the time, chairman of Apollo Global Management. Oh, yeah, okay. Oh, interesting. He's over at Apollo now. Now took over the DOJ's office for the Southern District of New York. Oh, so he's back at the government. He was at Apollo in between. Vehicle to vehicle. How fund managers value private assets when transferring them into a portfolio, such as a continuation vehicle. The popularity of those funds has exploded as a way for private equity managers to offer existing clients the opportunities to cash out of their stake, even when underlying holdings are difficult to sell. Yeah, it's also called a Ponzi. That hasn't slowed down a boom in continuation vehicles, as they've appeared in private credit as well. But such asset shuffles be ripe for abuse. May be ripe for it. Watch out for marks on assets with no trading. Right, from Fund A to Fund B. Great. JP Morgan warns about cockroaches. Well, he's feeding the cockroaches. We know that. Okay. All right, what else do the Doomers have for us? The Doomers. Marjorie Taylor Greene. Oh, she's a traitor. She said she didn't like me, and now I made her quit. Well, should have said you like me. TSMC who sues ex-executive who joined Intel. Hey, boys and girls, give me a bunch of stonk comp and I'll show you how TSM does it. Nice. Apple cuts jobs across sales organization in rare layoffs? I didn't hear this. This hit like no news. Jamie Dimon is the cockroach wearing that guy's skin in MIB. Oh. Men in Black. Cockroach suit scene. I want to see that. Cockroach alien. Hold on. Let me just check it really quick, because if we're gonna risk demon, let me make sure I got the right clip here. That could be a good reference. I like this. How come I can't fast forward on oh, here we go. Here we go. Oh man. Okay, hold on. Oh man, it's a giant cockroach. Oh my lord. Oh dear. Sorry, it's like so wrong. We just have to like, oh yeah, he's even like, oh what the hell this shit? Oh my god. Leaked footage of Jamie Dimon. Dude, that's a clutch reference, man. Guys, there are cockroaches all over the place. Including me. Oh, no. No, we don't want it all to crash. Oh, no. It's okay. It's okay. NVIDIA's coming up. It's okay. NVIDIA's... Guys, it's okay because NVIDIA's going up. See, the candles are green. It's only down 4.5% today. Okay? You know... That's only $200 billion. Okay? It's just $200 billion. Don't worry. It's only a Disney. They just farted a Disney. Ugh. All right. So, what else? All right. So, private credit. Wall Street. Okay, we saw that. Apple. Apple has eliminated dozens. Wait, dozens? We're talking about like 24 people? Dozens of sales roles in a bid. Well, roles. Okay, how many people does this affect? In a bid to streamline how it offers products to businesses, schools, and governments. Rare layoff for the iPhone maker. Okay. Management notified affected workers over the past couple weeks. The cuts extend across the sales organization, hitting teams especially hard, though the company didn't tell employees how many roles were involved. Apple confirmed the reshuffling. To connect with even more customers, we are making changes to our sales team. So, to sell more, we're going to fire more. Okay. 20 roles. Employees who lost their job have until January 20th to secure another position within the company or they'll be terminated. Some inside say the effort was a move to go towards third-party resellers. Some organizations prefer to work with those indirect sellers, as it helps helps lower Apple's internal costs. Yeah, that's not uncommon. You know, when you can outsource, it is often a great profit saver for your company. Not always, but often. Yeah. So, did you see Value City Furniture closing? Man, you donate $2 to get my attention? You think I'm that cheap? Value City Furniture. Value City Furniture. Wow, following bankruptcy, you're right. The Schlottenstein family. No, it's Schutten. Schutten. What is that? Is this Dutch? Is that a Dutch family? Stein is rock in German, but I don't know what the hell Schutten is. What's a Schutten? It's gotta be Schuttenstein. It's got to be Dutch. Entrepreneur from Columbus, Ohio. I don't care where he was from. Where was his family from? The son of Jerome Schuttenstein. Okay. Jewish? Well, that was unexpected. Lithuanian Jewish immigrant. Well, boys, I guess it is possible for Meet Kevin to make a mistake. I couldn't properly identify the Jewish last name. I have failed. Schuttenstein. Schutten. What the hell is Schutten? Alright, whatever. Due to economy. Huh. Another Columbus-based... What is this flickering? You can't get a website that doesn't flicker? There, it stopped. Another Columbus-based furniture company filed for Chapter 11 bankruptcy protection. This time it wasn't Big Lots. American Signature Inc., known as Valley City Furniture, here in Central Ohio, filed for bankruptcy. Well, we lost another one to tariffs. That was the point, wasn't it? Bankrupt the poor and enriching the rich. In the face of ongoing economic headwinds have impacted the entire home furnishing industry. You know who called it? Was the Restoration Hardware guy, right? So remember how, like, if you go to the stocks tab in the Meet Kevin app, if you're like so inclined to be a member of the Meet Kevin products over at meetkevin.com, if you go to Restoration Hardware, it was, I'm just saying, a lot of people are going to close. It's right there. You can pull it up in like 10 seconds in the Meet Kevin app. Meet Kevin app. Stock membership. Lifetime access. All right. So what do we got here? Somebody says, Kevin, you should have your own coffee brand. Coffee Hack. Oh, yeah. Oh, yeah. Oh, did that... I wonder if that video ever downloaded. What? Oh, there it is. Oh, yes. Wait. What the hell is this? Did it download or not? Damn it. It said, thanks for downloading. And then it didn't download. What a scam. Let's try again. It's a virus. Oh, I got it. There we go. All right, boys and girls. We got it.
Corruption is not bad. Corruption is only bad if I'm not involved.
Yes.
But if I'm part of that corruption, I'll defend it.
I what it?
Of that corruption, I'll defend it.
I don't know what that last part is, but that part's not as fun. Brandon gave me $5 to say happy Thanksgiving to you and your family. Thank you so much. You know what? Let's go, Brandon. Guys, he's never heard that one before. No, thank you. That's nice of you. All right. So, we're gonna have to beam that up. Defend it. Oh. Man, it's not as good of a clip, though. The first part is what matters. That's what we want. We just want the first part and nothing more. All right, where were we? Weren't we doing work? I feel like we were working, and then we got distracted. It wasn't even Sarah this time. Oh, yeah, we were looking at Valley Furniture. Was this like Valley Forge? Did we win at Valley Forge? Winter at Valley Forge. I mean, obviously we're America. Period of extreme hardship for George Washington's Continental Army marked by extreme lack of supplies, food, and shelter led to widespread disease and death. Despite the suffering, the Army's time at Valley Forge also saw them construct rudimentary huts, receive crucial training from Baron von Struben. Now there's a Dutchman. That's a Dutchman. And emerge as a more disciplined fighting force. Okay. December 1777. Wow. Oh, that crazy. Anyway. So, I guess Valley Furniture got Valley Forged. Alright, so where were we? Part of that corruption. There we go. Okay. So now what we have to do is, we're gonna have to make that a button. I think if we make a good button here, we could do this, and then we'll get back to work. So the problem is, I got so many frickin' buttons. I'm gonna have to make a second page of buttons. That's fine. I'll make a second page of buttons, and then oh, I don't know how to do it with this layout. Okay, I'll add it later. But anyway, we'll make it a button. It'll be a good button. It'll be the best button, the greatest button ever. We'll handle it later. So the company is now up for sale, according to a WARN notice. That's it. House Hack's gonna come by Valley Forge Furniture. Guys, it's just a temporary hardship. See through it. Man up. They will close due to significant declines in sales, resulting in liquidity challenges. What a surprise. According to Furniture Today, well, they're next to go bankrupt. What the hell is Furniture Today? Is there like a magazine dedicated to furniture? Furniture Today. Yeah. I guess so. Literally a magazine dedicated to what's going on with furniture stores. Reported estimates of assets between 100 million and 500 million versus liabilities of 500 million to a billion and an estimated 1,000 to 5,000 creditors. Are you kidding me? That's massive. Oh, a lot of people. Oh yeah, same thing right here. Okay. Sonny says, Kevin, are you going to buy Ben Mala's $35 million house? Yeah, for 4. I gotta get a deal, man. I don't want it unless it's a deal. 35 mil. Come on, man. No, man. You don't buy the best house on the street. Top 100 retailer was founded by the Schuttenstein family. Alvin Schuttenstein took it over, and Jay was named the company president. 4 more closing in national. Yeah. But wait, there's more. My goodness. I mean, sign of the economy right here. Yeah, it's sad. Who's Sarah talking to?
Consumer-facing prices.
That's not Sarah.
I think our Bob's probably down double digits year on year. I wonder to what degree that's going to actually make its way to the consumer, at least here stateside.
Yeah, I mean, so if you look at what we have in our balances, we have a 1.7 million barrels per day of surplus for next year. And
yeah, okay, nobody cares. All right, so Tesla is literally at the 414 line. It's a big moment. It's back at the line. It's a big line. Some would say a very impressive line. All right.
High. They're rising as the company is said to be in talks, potentially with Meta, over a deal to provide AI chips, TPU.
Bro, Google shares are not rising anymore. They're up 13 basis points. This is indistinguishable from flat. All of Google's run has evaporated from this chip news. What the hell? Wow. Nvidia. The Qs. Well, the Qs are still somehow going up. And just like the components, because Meta's going up. and Cheesecake Factory. Microsoft's flat. Apple. Oh, Apple announces layoffs and the stock goes up. That's the downside. Yeah, I hate to say it, but that's the problem. That is the problem. Is unfortunately, when these companies announce layoffs, the stock goes up. Open Door is a terrible real estate play. Open Door is a meme. That's all Open Door is. Kevin, who do you think is a good candidate for governor of California? Honestly, I haven't seen a single good one. I'm hoping that LA developer guy runs, Caruso. At least there'd be some hope. But I don't think he's announced yet. But no, Open Door is a meme. Their business model is terrible. You know, their gross margin is like 7%. And they lose money. They don't have hope, in my opinion. They have a bad business model. I do think they're really good at their app, like selling the properties once they have them. The platform for selling is very good. I think they've done a very good job on that. So I will give credit where credit's due. You know me, I will give you my honest opinion. I will tell you where something is good and where it's bad. Yeah, but financially, it's a wreck, dude. It's a racket. All right, so what else? The FT. Oh boy. Nvidia slipped from highs. Market is embracing the view that Google is a clear-cut leader in AI. Reporting the information on late Monday suggested Google was pitching potential clients on using TPUs. Nvidia has now lost more than $800 billion in market value since it peaked. Blah blah blah. That's it. Comments. Let's go to comment section. Did we just respond to the market reaction? Do we just respond to market reaction as memes from now on? These bubbles are so stressful. Dude, if you're stressed out by this, you're overexposed. Somebody goes, 6-7. Dude, what the hell? In the Financial Times? Are you kidding me? Where did they say that? I don't even see where they said that. 6-7 has now randomly infiltrated the comment section of the Financial Times. Oh my God. Somebody says, why are retail stocks up so much? Because Kohl's and Abercrombie did well, and retail stocks have absolutely tanked, dude. So it's a dead cat bounce. I mean, Dave & Buster's is up 13%. But zoom out, bro. Zoom out. It's down 50% in a few months. Guys, I'm up 13% on Dave & Buster's. Yeah, you're down 50% in the last 3 months. Oh, I don't want to talk about that. Oh boy, that's a bad result. Oh no. Oh no. Don't let Minnie find out. If she finds out, she'll leave me. Man, this is exhausting. All right. Okay, what else? Blah, 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 blah. Oh boy! The worst good paying jobs in America. Okay. Man. Oh my gosh, I got like 1 ounce of coffee left. This is terrible. All right, what we got here? Death threats. Marjorie Taylor Greene. Oh. The worst good... Wait, what does this have to do with the worst good paying job in America? Most lawmakers make $174,000. Oh, they're just... Well, that's dumb. I thought this was going to be like a chart of like bad, good paying jobs. Dude, I got clickbaited. I hate getting clickbaited.
To go for a wheelbase just for the simplicity, for lowering costs, and to allow us to move faster.
Talk to us about costs. You have managed to raise seed
Our
funding from
robots
Sarah.
are trained on real human movements. Our robots are real. That's a real boy. What's that line from? I'm a real boy. What is that from?
It's actually quite differentiated from a lot of the humanoids. Even at quantity zero, when we prototype it these days, it costs around 25K to make.
Yes!
Awake, Pinocchio. Awake.
I don't want to get canceled here.
Father, what you crying for?
Anyway, what the hell is going on there? I'm gonna tab away from that. That doesn't look right. I thought this was a Disney thing. Alright. I'll quickly back away from that. Just gonna pretend that never happened.
For engineers, but we are lacking in terms of some of the supply chain infrastructures. So I think we're at the point that we need to leverage some of the growing supply chains, the humanoids in China, and we actually share a lot of components with them so that we can have the economy of scale before us shipping like millions of robots.
Tony Zhao, CEO of robotic startups.
Disney Diddy.
Exactly. That is what we're seeing with Dell. The big focus is on whether soaring memory chip prices are going to squeeze profit margins, to your point, Carl. So memory prices have really surged over the past 6 months, and memory accounts for anywhere between 10 to 70% of the bill of materials, depending on the product. So for AI servers, it's a little bit less. For older products, it's more. The issue is that Dell's gross margin estimates for the quarter have barely budged just in recent months, despite these higher memory costs.
Can we get Taylor
and so
Riggs?
That potentially sets.
Let's go to Taylor Riggs.
Talent. Your local design consultants, measure technicians, certified master.
Not Windows, please. No, not Windows sales. I don't want it. I don't want it. I don't need it. I don't need it. I need it. The self-driving taxi revolution is here. Oh, give it to me straight. Listen to AI narrated. Oh! I made an AI song? Am I gonna get in trouble for playing an AI song? For when we launch our house hack, I was just messing around with this, but our house hack AI.
Look. If you had reinvest AI, one shot, one sight to clap Redfin and Trulia in a single bite, would you tap it or just keep scrolling past it?
Oh! Damn! sorry. So where were we? Carnegie, no hand, okay. The number of American cities on Robotaxi roadmap is rising fast. Alphabet owned. Waymo, world's biggest fleet. Let's see here. Elon Musk and Tesla expanded its rudimentary robotaxi service. Okay. Yeah, that was AI. It was kind of ridiculous, honestly. Reinvest AI. Did I use the Patrick Bet-David theme voice? I don't know. I don't know what it is. I think that isn't that just a regular. It's like $8, and you can like make a song, and you know you slap some lyrics in. I love the like extremeness of the comments. Somebody, that's so bad. Literally next comment, that's dope. All right. Focus. So, Tesla's expanded its rudimentary robotaxi service, which still has a safety monitor. Zoox is expanding, blah, 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 blah. Okay. Many people, recent YouGov survey say they have little or no trust in self-driving cars. They'll come. They're fine. Waymo and other competitors. Which AI was it? I don't remember. I guess I should know because I'm paying a subscription there. AI song. Oh, Suno. It was just the first result. It was like one of the AI ad sponsored results. See, like literally, you could see sponsored result and me clicking on it. But honestly, I mean, it wasn't bad. I think I only had to generate like 50 versions to get one that was this decent. And this one's, it's not like, it's obviously not perfect, but I mean, it's a minute long. I'll just play it in the background while I read and it's AI. So this is AI education, okay? So we'll play a little bit more.
Look, if you had reinvest AI, one shot, one sight to clap Redfin and Trulia in a single bite, would you tap it or just keep scrolling past it? Yo, knees weak, palms sweaty, Zestimat's petty, your agent's not ready, price cuts dropping like confetti. He's scrolling on Redfin, hoping deals just appear, but the good ones vanish faster than your New Year's cheer. Snap back to reality, Zillow's fatality, listings disappear like a landlord's morality. You're stressing, guessing, praying for a blessing, while every other buyer got their bot second guessing. But this ain't grandpa's MLS, doors unlocking, reinvest scans, blocks like a hawk that's stalking. Cold, so cold zones unfold, equity told, we dig what Trulia misses in the blind spots of old. Look, while normal buyers chase listings they barely review, reinvest users chase profits, boom, breakthrough.
Stop scrolling, start owning, spot a profit, you better never let it go, man. Don't buy a liability, buy capability, reinvest AI, link in bio, let's go.
I'm sorry. Oh man. Somebody says this could be good if I didn't know it was AI. I thought it was pretty good. You know, I'm like, damn man, the AI's getting good, dude. Reinvest AI, Lincoln bio. I don't know. It was like, damn, dude. Like it's I don't know. I was like, wow. Oh man, I'm gonna cry. Okay, so where were we? Several innovations have combined to make this possible. LiDAR. Let's see here. Please shut Pinocchio for Shrek. I'm a real boy. Okay, let's go. Yeah, I mean, I like that. I think that it'll be fun. Shrek. I'm a real boy.
Pinocchio, get the wand! I'm a real boy!
That's funny. Okay. Wow. Okay, so, where were we? Let's see here. As robotaxi services have expanded, they have hovered up more data, allowing them to refine their service, climb, blah, blah, blah. Fewer injuries. Yes, we know. We know robotaxis are great. I feel like we've gone through this sort of article before from The Economist. Waymo's hardware estimates are $130,000 to $200,000 each. Holy smokes. The cost of sensors is coming down to American-made LiDARs used to cost $100,000. Now fetch little more than $100,000. Fetch!
Fetch me!
Huh. Economics of robotaxis can be improved in other ways. Then there's NVIDIA. Yes! Yes, the AI revolution's biggest beneficiary, carving out the role for self-driving vehicles alongside Uber is supporting car makers. I actually think this is really smart by Uber, because I don't think it matters who's driving the car, a robot or a human. People are going to be used to going to Uber on the app. Kevin, you should pay the Power Rangers theme as a troll. You know, I never watched Power Rangers. Should convert it to 10 USD. Please top it up on Roblox. Please pay. Let's go right into Roblox. Yes, thank you. Yeah, I don't know. I wasn't into Power Rangers. Weird, huh? Because everybody in my generation was. So... Got a good beat though. All right. So, what else is going on? Are we, sir? Did the Qs go green? Did we gain the lead? Oh my gosh!
Gain the lead.
Look at that. Well, that's good. Look at that. We're going right to 67. Wow. Wow. Good. Good. 7%. Rocket Mortgage. Teslas. Oh! Almost green. Not a coffee. Trump to pardon Thanksgiving turkey. Oh, here we go. AMD's trying to come back to 200. Okay. Okay. Meta. All right. What do we got over here?
Better.
Oh, we still have to listen to Myron.
For example, Edward just reported that the Thanksgiving meal is down 5%. If you look at Walmart's numbers, they're different. The president cites different numbers. So it's also hard.
All right, whatever. Let's see what the Doomers have. Oops, did I mess it up? I think I messed it up. News about the Fed chair, is there?
The Federation says they're going to be up.
Hassett emerges as front runner. Oh no! A shill! We'll talk about that in just a moment.
I'm still not sure that it's getting across. I would just say this, we're at the end of November. We got to get through the holiday season. It's basically another month to go before we enter into 2026. But I said this yesterday, and I'll say it again. This administration has to deliver on what it promised, which is bringing costs down to a point where those perception numbers change for people.
The president and the first lady, by the way, as you can see on your screen, walking out for the pardoning of the turkey. I'm not good at doing color commentary on pardoning ceremonies. I've never done that before, so I won't try to, Dagan, but I will ask you a question as we watch this about PPI for September, which we got today. It's an old number, okay? It's an old number. Curious what you make of it. Headline was 2.7% from last year, excluding food and energy, 2.6%. A number that's encouraging, a number that's...
Somebody wanted to say hi, by the way. You want to say hi? Yeah! Now, what are you doing today? What? Phone? No, you can get the calculator. Here, do some math.
In the direct sunlight, that's how stale it is.
I get the picture. So meaningless or not meaningless?
Nothing when you have no data, and will have no data for the most part from October, is meaningless. I actually had that conversation on the phone this morning with economist. So, because I said this is meaningless, and the person said no, it's not completely meaningless. But to Jackie's point,
lol. Pardoned the turkey, and it turns out to be CZ. Nice. We're going to talk about the Fed thing in just a moment, but I'm going to finish my coffee here.
It's noticeable.
Why aren't they playing Trump? Is he not saying anything interesting? They're probably not saying anything interesting. I'll be right back.
But they do feel it. And there was some numbers out from JP Morgan Chase about income growth in the most recent 3-month period, and it's tepid, if not weak. In the 3-month period ending in October, real median income growth was 1.6% on average. And that is just not making anybody feel good. And it shows up in the consumer confidence numbers this morning.
And that stems from actually, I think, the government shutdown in a lot of ways. Because I mean, you said that was an October number, right? And
ending in October.
Well, I have a very interesting statistic. It's a little stale now because the market's recovered a little bit the past few days. But if you look at GDP, the hit this year was negative 1%, or projected to be negative 1% in the government shutdown. 2018 and 2019, it was negative 0.3%. If you look throughout history, the stock market correction on a negative 1% contraction, or at least reduction in GDP, correlates to 5 to 8% of market top to bottom decline. Where was the NASDAQ last week? Negative 8%. So I think a lot of this is priced in. I think the liquidity is coming back in the system, which is going to set up a stellar, I think, beginning to 2020.
But to that point, that if you are nearing retirement and the price of everything that you buy keeps climbing, and you don't have a lot of your money socked into assets that have been appreciating, then consumer prices climbing, the price of everything going up is deeply disturbing to people. And I just want to pick up on what Secretary Bessent said yesterday, that if you want to, the best way to bring your inflation rate down is to move from a blue state to a red state. Well, unless you're independently wealthy or self-employed, that's just not an option. And you can talk about affordability if you work in the White House, but telling people to move is the wrong messaging.
Even if you want to, that's a big, tricky way to deal with a pricing problem. Taylor, I will say, though, we got the Dow up there.
Yeah.
Up over 1%. NASDAQ's just up fractionally, so not as much. But markets seem to like the news coming out today. Luke talked about the NASDAQ coming down. It came back up. What do you make of all this?
So part of this could be a push-pull about the Fed, which I know that we'll talk about next block.
It is hot.
In theory.
Sorry, Summer was here last, and then Violet got jealous. So Violet wanted to come. Can you say hi? Say hi. No? Okay. It's okay, buddy. So anyway, okay, we're going to talk about this Hassett thing in just a moment. Let me see, are they saying anything here yet?
You check your pension fund and you realize that we're trying to recover. Also, Brian, it was a good reminder, and maybe
work?
Dagan, correct me if I'm wrong.
Say work.
Mag 7 in the last few days. Now, not all Mag 7 is the same. I know that. But we were broadly only looking at a little bit of a pullback. You were nowhere near like sort of a broader 10% correction, right? And so I think people feel when the market goes up, certainly a little bit better with that wealth effect. Brian, a few things concerned me within consumer confidence. The big decline came from independents. Now, we've talked about how skewed politically some of the consumer confidence can be. When independents are starting to feel it, that's showing it's not just a Democrat or a Republican issue.
That's right, Taylor.
Might be a little bit more broad-based. Let's just keep that in our minds. Also, within retail sales, I think what struck me is, miscellaneous things that were up within the strongest retail categories were things like florists, office supplies, gift shops, pet stores for all of our dog lovers on this panel. Robust equity markets helped some of the restaurant and bar spending that was up big time. Huge. What's interesting is what didn't do well, to me, felt like the more expensive items. Clothing, electronics, vehicles, online retailers, maybe in anticipation of Black Friday. We'll see. We won't see. So certainly continued divergence underneath the numbers.
Right. And tracks with what we saw with individual stocks. TJ Maxx was great. Marshalls was great. Right. These Gap, you mentioned the Gap.
We'll come back later,
they were up higher end stuff, maybe not so much. By the way, you are looking at retailers, Taylor, a couple of names. What do you got?
Okay. Kohl's. We talked about this. The CEO said that they're seeing increasing value-seeking consumer behavior to continue in the fourth quarter, but they are reviving categories like fine jewelry and accessories. The stock jumps, you guys, 35%. They're also doing partnerships with companies like Sephora, for example. Similar story with Abercrombie & Fitch. This stock is all
right, let's get to work. So, what were we doing? I don't know. Should we make a video? Let's make a movie. Can we you want me to show you my lines? Somebody's donating money to see my lines? Bro, like, how about dinner first? I don't really actually have great lines on Palantir. It's so high, I have nothing here. So really what I have is I have a long-term trend breakdown, which you can see here. I have losing the 100-day moving average, and then I have a 200-day moving average coming up. So I don't actually really have lines here. I mean, you could retrace. We could slap a retracement on this. I'll do that for you. So just put a normal Fibby here. That should give us some guidance. Let's go to the extension, because otherwise we'll be at 0. So we'll go extension. All right, so let's go 207.52 and 584. And we don't know if that's good yet, so... I mean, you're right below the 164.37 fib. Next stop's 130. It would not be unreasonable at all. I don't also know how well this is tested here. I mean, This 82 line's pretty strong. I do have that 89 line here. But otherwise, I don't know that this fib is so great. Like, this uptrend's much more powerful. So I don't know. I don't love it. Tesla's about to go green, which that's good. Stocks could be moving up on this Hassett thing, by the way. Like, the Hassett thing, oh, we're almost back at 607. The Hassett thing is interesting. So, all right, let's go. So, let's see. I think it's the Doomers who have it. Yeah, there it is. I didn't mean to do that. Wrong button. Mental problem. Well, it's official. I'm leaning towards choosing Kevin Hassett. That's right. Kevin Hassett apparently emerging as the quote-unquote front runner for the Federal Reserve. Scott Bessent mentions that we should be expecting Kevin Hassett to be essentially formally announced before Christmas. And now they're sort of softly leaking this reveal. This is a very common strategy by government to slowly kind of hint that, oh, we might be choosing this person. They purposefully leak this so they could see what the market's reaction is. So what Donald Trump and staff are going to do now is they're going to monitor the reaction in markets, specifically regarding the dollar and with treasuries. The dollar is already moving slightly lower on this Hassett rumor, quote-unquote rumor. That's the intention. Kevin Hassett, in my opinion, is a wet blanket. I'm not trying to be offensive here. Maybe I just, maybe we need to sit down for dinner and I need to be impressed here. But I feel like he's more of a Trump shill. He's actually the perfect candidate for Trump to choose because he doesn't have the balls of his own. Like Myron, who, we'll go through what Myron just said in a moment as well. He's calling for Fed rate cuts. But Myron, we know that's old news. Myron, even though he's also a shill, he has balls. Like, he will stand with facts. I don't think Hassett does that. Now, that's somewhat good and it's somewhat bad. So here's where it's good. It's good because it's bullish rate cuts. Hassett, he's going to do whatever Trump wants. And if this economy continues to decay the way it is with labor statistics data that we're seeing now, ADP report this morning. Remember what we saw with the ADP report of consumer sales this morning? I mean, let's do a quick recap of the numbers. So this morning, with the ADP 4-week moving average coming in at negative 13.5, we are getting data 4 times as fast as we used to get it, because now we're getting data on a weekly cadence with a 4-week moving average. And it is now on a 4-week moving average declined from negative 2.5 to negative 13.5. The Federal Reserve will be getting this jobs data, which we just got, plus the ADP jobs data for the full month of November, plus the first weekly report, which will be the day before the Fed meeting, before their presser on the 9th. They'll be getting that weekly data as well. So the Fed's going to get a lot of ADP data here. People are like, oh my gosh, the Fed has no official BLS labor report data. Okay, they'll just use the ADP data and we'll get our rate cut. It's not a big deal. But the concern really is what happens after the 25 BP rate cut, which is an 85% chance right now. The concern is that the economy continues to decay. Well, you've got this large chorus at the Fed that's really worried about inflation. Hassett, being, the Trumpian shill that he is, will favor rate cuts as opposed to worrying about inflation. And he could drive, along with Myron and others, towards consistent more rate cuts. Now, that's actually coincidentally probably the right move. Like, I'm of the mindset that any kind of tariff inflation will increase prices, but then next year we'll probably see deflation, because as the economy collapses slowly, it's slow bleeding, I shouldn't say collapsing. As the economy dims, I guess is the word Bloomberg is using these days. As the economy keeps dimming, as we see layoffs at even like Apple now, right? Look at this. Apple cuts jobs across its sales organization in rare layoff. As the economy keeps dimming, we're likely to see a need for more rate cuts, and we're going to see more disinflation. So far, I know when people hear that, they're like, but Kevin, prices are still high. I know. It's coming. I mean, I like using this as an example. I went to Target with Jack. Oh boy, this was probably like three or so weeks ago. I go to Target with him, and I'm like, maybe I can pull up the picture. I go to Target, we go up the little escalator, and they've got this whole rack of TVs, And I'm like, I just bought a 55-inch 4K TV on Amazon for like $340 or something like that. And then I see in Target, I'm like, what the hell? They have the same essentially 4K TV for $250, and then there's another one for $199. And I'm like, this is crazy. This is literal deflation happening in TVs. Now, TVs could be loss leaders, so it's not necessarily an indicator of the economy. But it's wild because, yeah, there it is. I have a picture of Jack. I just found it. I have a picture of Jack standing in front of it. That was the 43-inch was $199. The 55-inch, which was the same size, was this other picture. Here was one at $249.59. So it was like $100 less than Amazon. And I just went there yesterday as well, or 2 days ago, and I think the prices came down even more. Maybe Black Friday sale or something like that. But like, that is gonna come more as stores realize, this is my bottom line sentiment for Target. I think Target realized that they spent too much time remodeling their stores and trying to make their stores look nice. And what they've done is they've forgotten the thing that brings people to the store, and that's everyday value. You know, people go to Walmart because they see the rollback advertisements in their face every single day. People care less about this, you know, fancy design that Target does with their stores. They want the bill at the checkout to be lower. Well, the economy, you see, like this is Target, for example. Here's like, they're trying to make their stores all fancy with this Ulta partnership or whatever, which that failed also. You know, Ulta's already rug pulling Target on that. So Target's getting hit. They just need to lower prices. But the point is, the consumer is weakening because the labor market is weakening. Apple's laying off. You've got consumer confidence plummeting, the lowest consumer confidence since April. We've got a retail sales miss, and that's driven by the only reason you had a little bit of a beat or a match here was because of gasoline. We looked at the components of this. But if you remove autos and gas, retail sales miss. You're actually on control group negative for September. Now, it's older data, but I personally think this is because people spend a lot of money worrying about, you know, oh, they're going to raise prices because of tariffs. Prices are going to come down over the next few years. And somebody like Kevin Hassett, who will aggressively lower rates, I believe, will actually be not only good for the real estate industry, but it'll be potentially in the short term good for equity markets because people will be like, yay, you know, stocks up because rate cuts. And risk assets will go up. You know, Bitcoin's up $500 since this Hassett information is out. But the underlying economy is still one that is fueled by debt. This is just our gas price analysis here. And there's a problem with that. See, we talked about this quite a bit yesterday. This deficit financing that you're getting from the AI companies is unfortunately quite a big risk factor for the economy because the more companies start getting nervous about the debt that's being loaded up, the less of the banks are willing to actually finance these AI products or projects. And that's the big risk factor. Now, I want to listen to what Myron said this morning because he's also shilling for rate cuts, which is great. You know, we do expect this rate cut to come in December and then more to come as the economy keeps weakening after that. In the short term, the stock market ironically loves the idea of a weak jobs report because you get treasury yields that come down and you get the odds of a rate cut up, which is short-term stimulus. But let's listen to Myron here, and then we'll talk a little bit more about AI and data centers and what's going on with the spend because, you know, obviously there was a lot of enthusiasm about Google this morning. But surprisingly, Google actually gave up a lot of its pre-market enthusiasm, potentially as institutions kind of start saying, you know what, time to ring the bell, time to take a little bit of profit. Now, in fairness, regained 414 on Tesla, regained green on the Qs. We're back at 607 here, likely because of this talk of rate cuts. But let's listen to Myron here. Oh, and the appointment of Hassett. In the short term, bottom line on Hassett, good for stocks, good for yields. In the long term, it's probably also exactly what the economy needs. Worst case scenario, you would have gotten, in my opinion, somebody like Kevin Warsh. Kevin Warsh, he wouldn't turn on the money printer, in my opinion, if the economy crashed. So that's what you have to consider as well. Like, what happens if we actually go into a recession? Who do you want at the Federal Reserve? You have a choice. You could have, oh, there's Taylor Riggs. That would work too. You could have Kevin Warsh, who's somebody who is reluctant to print money. And we saw him at the Federal Reserve in 2008. He was reluctant to turn the money printer on. Do you want somebody like Kevin Warsh or do you want somebody like Kevin Hassett? I mean, if you want it all to really go to hell in Great Reset, you want a Kevin Warsh who's going to go, no, we're not going to print money. If you want the money printer to come and you want some buy the dip opportunities, you want a Kevin Hassett. Because if poop hits the fan, not only is the guy going to cut rates to zero, but he's going to drive the money printer through the roof. It'll be great. You know, risk assets will love it. It'll be a generational buying opportunity is what you get if you slow bleed into a recession, and then you get Kevin Hassett printing money. But anyway, let's listen to Myron. Oh, Fox News. We got the pinwheel on Fox News. Oh, we got to go through an ad first. Well, you know what? While that 13 seconds goes, did you know you could get lifetime access to the Meet Kevin Alpha Report by going to meetkevin.com? Get all our insights on stocks every morning before the market opens and trading insights. meetkevin.com.
You can't.
By at least 1/4 point. Stocks moving higher yesterday on the expectation that we will see another cut. Fed Chief Jay Powell under pressure from the president to keep cutting interest rates as we see promising inflation numbers. And he
is exerting, restriction on the economy. It's holding the economy back. It's pushing the unemployment rate gradually upward, and I don't think that's appropriate given the economic outlook. So
yes,
I think it's
absolutely agree. And remember, the unemployment rate is already starting to rise, and we have not seen a stock market tank yet. That's the concern, is that so far the stock market, in fairness, has done fantastic. You know, every opportunity this year has been a buy the dip opportunity, with the exception of like MicroStrategy. MicroStrategy posted at Real Meet Kevin on X this morning that it took 3 months to lose 34% of its value. It's only taken 3 weeks to lose the next 42.7%. It's been a problem. But otherwise, stocks have broadly been a buy the dip all of the year almost. And so that we have not tested yet. If we end up testing that to the downside, that's when you could potentially get early retirees coming off the sidelines. Then you get the labor force participation rising. And then you really have a problem in the labor market. So trying to get ahead of that, especially with a Hassett appointment, kind of smart. So you're going to get a short-term pump out of this, and that's exactly what Trump is trying to engineer. I mean, you've had 3 weeks of the Qs going red. You had a little bit of a bounce yesterday. Now you're going to get a little bit of a Hassett pump here as well.
The right thing to cut interest rates rather quickly. Now, I think what you'll see on the rest of the committee is that the labor market data that we got recently, I hope will move people in my direction of thinking it's appropriate to continue cutting interest rates. I think that's what the data call for. And, my guess would be that's what we get, but I can only at the end of the day speak for myself.
Look, I know that you're following your mandate and your colleagues are on a mandate, but when you consider some of sort of the larger issues happening, like, for example...
Dude, who wears white socks with a suit like that? Is that a new thing? Am I missing something?
That's what we get, but I can only at the end of the day speak for myself.
Look, I know that you're following your mandate and your colleagues are on a mandate, but when you consider some of...
White socks don't belong on a suit.
For example, AI. AI is expected to replace jobs in a big way. Yes, we're going to have new jobs coming up, but that whole structure and this issue...
Precise numbers on the footprint of AI in the economic data on a real-time basis, other than say in some of the investment data that you get about capital formation in the economy. But when it comes to thinking about what AI means for the future, if you get AI replacing some workers at various parts of the labor force, what that does is it's both disinflationary because it's disinflationary because you have a new technology allowing you to produce more with less.
Right.
Those counts.
This
AI would
disinflationary
encourage us,
argument
in my mind, to move.
The disinflationary argument he's making is really a way of reiterating that this new Fed board is going to be very interested in cutting rates. I wouldn't be surprised if Hassett drives us to zero. Mark your calendar, okay? Mark your calendar. The year is 2032. We look back, so that's 7 years from now. The year is 2032. We look back, we go, the labor market rolled off a cliff. Kevin Hassett cut rates to zero, expanded the Fed balance sheet from $6 trillion to probably, honestly, $20 trillion. We are 200% debt to GDP. We're way more in debt than we've ever been before. But we're actually at this new sort of decade of stock euphoria and asset value euphoria, where the people who own stocks and real estate end up even richer than ever before, than ever wildly imagined because of the amount of money printing. Mark it on your calendar. Tell your phone or whatever, hey, you know what? Remind me in 7 years.
Interest rates a little bit lower down.
So what do you want to say about the mandate as it relates to employment? Because we're getting all this data now after the government shutdown. We'll get retail sales this morning. We'll get the producer price index. What about jobs?
Yeah, so that is the key question. Now, as I look forward into 2026, I see a few reasons for optimism, right? I see the effects of deregulation continuing to kick in. I see the effects of tax policy, like full expensing of investment, continuing to kick in. I see the effects of the trade deals in which other countries have committed to invest in the United States kicking in, and the dissolution.
A lot of people are really enthusiastic about this. That, hey, you know, we're going to get tax cuts, maybe we get stimulus checks or whatever in 2026. It'll be a great year. The problem is a lot of that starts getting priced into the stock market now. And the big risk that I get worried about is that we actually end up having a failure of financing. That's the biggest concern that I have. So you look at, the data center financing we're seeing right now, and really, if you stop financing Oracle or CoreWeave, you're done. You know, people got pissed off at me yesterday on X because I posted this video clip of me explaining how financing is done for these AI plays. And frankly, the concern is that as soon as the Kool-Aid stops flowing, it's over. Because you need the debt to keep flowing to fund these chip build-outs. And if the debt stops going to companies like CoreWeave, then you've got big problems. Now, 607 seems to be a little bit of a stopping point, not a surprise for the Qs, but look at CoreWeave. I want to show you very important lines. Okay, so if you go to CoreWeave right here, that's 6847 line. If we keep losing these lines, which so far we've been taking out, every single line on this retracement has been taken out so far. If we keep going down on CoreWeave, what'll happen is you're going to get under this 55 to 35 range. NVIDIA is going to start buying it. But then there's going to be a problem. NVIDIA is going to start buying a company that's actually going down. So NVIDIA buys, it just bails out existing shareholders. Then NVIDIA's shares go down because people are like, well, NVIDIA is the only buyer and they're buying a money-losing stock, so then they take profits on NVIDIA. And you get this sort of vice versa cycle. If CoreWeave loses its IPO price and we drive more people to sell, it's not that the company goes to zero because the stock goes down. It's that bankers get nervous. It's that all of a sudden JP Morgan, the cockroach in disguise, starts saying, oh my gosh, we can't lend to CoreWeave anymore because their stock is going down. You have to remember the stock is a form of collateral. So if the collateral value is falling, then you got problems. And you stop lending. And if you stop lending, now all of a sudden CoreWeave can't buy NVIDIA chips anymore. And that's when the growth rate of NVIDIA slows down. So really, watching CoreWeave stock, in my opinion, is a great tool for evaluating where are we in the cycle. Because once CoreWeave gets to the point where people aren't lending on it anymore, that's when your true problems hit. Remember that little debt chart. It's all debt fueled right now. We're past the cash fuel phase. Cash fuel phase was still good.
Of uncertainty over trade and tax policy. However, we have to recognize that the unemployment rate has been drifting higher, and that is a function of monetary policy being too tight. Now, my concern is that if we don't continue cutting rates and do so at a reasonably quick pace, that monetary policy will nip all those positive developments in the bud, and we will not get the recovery in the labor market that I think that is appropriate.
Yeah, I actually totally agree with him. I think he's right. I think if you want to hope that we're going to have a labor market recovery in 26, you need to cut rates. But I'm not like 25 bips ain't going to make a difference. You know, you probably have to go more aggressive. And I think Hassett, we're probably going to end the year next year at way lower rates.
Well, you make a really good point in terms of the expensing, because that is going to dictate decisions on the part of corporate managers. If they're able to expense things, well, then maybe they will hire more. Maybe they will invest more in their businesses. And we'll see that as a result of the big, beautiful bill in 26.
Well, we may if monetary policy doesn't get in the way. Now, I think it's really important to understand that if you push out the supply side of the economy, that is, all else equal, disinflationary. And when you think about sort of things like loosening regulations or capital deepening the economy that allows you to produce more with less, those are things that push out the supply side of the economy. And in my mind, pushing out the supply side of the economy means that you can accommodate lower interest rates.
Well, tell me about
in English, if we increase the supply of goods that we, can manufacture or provide, then we have to be less worried about inflation. And because we have to be less worried about inflation, we can cut rates more aggressively.
Are you still waiting on sort of expectations for the year? But because we're going to have a new chairman of the Fed, and we expect that you will have sort of a leaning toward lowered rates. But are you talking about a potential string of rate cuts in 26? Or are you talking about
pump it, baby,
a large
pump
50
it.
basis point?
Oh, it's going to depend on the data.
Take to the sidelines next year?
Well, so my view is it's appropriate to get to neutral rather quickly, and I've been very clear about that, and I thought that was appropriate in a series of 50 basis point cuts. As we've been making progress, it becomes a little bit less urgent to get to move in such outsized moves because we have been making some progress bringing interest rates down. The big difference between myself and I think where the bulk of the committee is not necessarily on what the end destination is. I think a lot of people, if you look at where their projections for the economy go in what we call the dots, they have us getting towards neutral rates. It's just over the question of how quickly we get there. And I want to get there rather quickly because I don't see an inflation problem. I do see potential risks to the labor market. And many of my colleagues sort of see the other way around where they do see inflation problems. In my mind, almost all of the inflation excess is a mirage. It's due to supply-demand imbalances in the housing market.
Wow. Almost all of the inflation excess is a mirage. Still talking about that lagging or lingering real estate impact. Let's fast forward a little bit here.
Supply-demand imbalances from 3 years ago.
Really
Same thing.
To sell the securities because it takes a really long time to roll down. At some point in the future,
mortgage-backed securities,
deposit redemptions, deposit flight, you need to hold reserves against those. So we tell the banks that they have to hold reserves. That creates a minimum level of reserves that the banking system needs because if the banking system doesn't...
We know they want the Fed to have reserves, fine. Okay, so we get the idea. Myron wants cuts. Hassett is going to be the enabler of that. Trump knows that. And it's like, honestly, if I were Trump, Hassett is probably the person that I would pick as well. Now, Myron goes on to talk about tariffs and how Trump says, hey, we shouldn't, cut tariffs or ban tariffs with the Supreme Court and all that speculation. What matters right now is that Hassett is probably going to continue to be seen as bullish. It gives us nice green push in markets. You're seeing it continue. What a surprise. Seeing it continue because this news is circulating. Oh, sweet. We're going to get those rate cuts. We're going to get a wet blanket. Perfect. It is what the economy needs. So it is actually a good thing, especially in the wake of that ADP data this morning and that softer retail sales data. Now the question is, can we round out? That's going to be where, we hold our breath and say, okay, well, hopefully we round out. Layoffs at Apple, little abnormal to see that. You've got Jay Clayton, who was Donald Trump's prior SEC chair, saying that there's some funky vehicle-to-vehicle financing going on in private credit that's leading to what he calls Mark II myth, which is just basically a way of saying that, you're seeing these private credit funds that aren't actually being honest about their losses. You've got another Valley City Furniture company here that went bankrupt in Columbus, Ohio, which if you look at, if you go to, this is our stock tab in the, what's it called? This is our stock tab in the, for course members. And if I go to Restoration Hardware here, RH, and this is only available to course members in the Meet Kevin app. But you can see here that the CEO of Restoration Hardware says, a lot of people are going to close. A lot of jobs are going to be lost in the furniture space. Well, that's exactly what's happening here. It's not a surprise that you're still seeing pain in the underlying economy. You're going to see that for a while. And that's why Hassett's probably a good choice for getting the rate cuts. Again, I don't think he's going to be the greatest economist, but he's going to do what needs to be done for the economy. The risk, and this is the part that is harder to evaluate. The risk is when you have somebody who's a wet blanket at the Fed, they're more likely to pull off an Arthur Burns. And this is the risk factor. This is very, very long term, okay? This is why we're keeping this at the end of the segment. Most people aren't going to care about this because in the near term, this is just bullish in the face of, as even CNBC reports this morning, a cyclical weakening of the labor market. You have to know that in the long term, if you have a wet blanket as Fed chair, somebody with no balls, you risk having an Arthur Burns situation in the 1970s. That's basically where the Fed had no balls. They vacillated with every single data point, no solid forward guidance, no mantra, no, targets, no goals, and they just changed their mind every meeting. And so what you ended up getting was massive inflation that ended up having to be broken by Paul Volcker in the 82 and 80 double dip recession. You had a double recession in 80 and 82 because of the failures of the Fed in the 70s, and then of course the price controls at the beginning of the 70s, which were just basically pent up inflation and prevented us from actually realizing the inflation until they removed the price controls. Then prices skyrocket, and you have a Fed that vacillates all over the place. And so there is an ironic good right now in having a weak Fed chair. Pump markets, good for the short term. The long term is bad because you get somebody who might not end up fighting inflation when we need it, because that is the risk factor. Is we get to do is some sort of weakening, we get money printing, and then we go right back to stimmy checks or some kind of crazy, whatever, fiscal stimulus, and we reignite the very inflation that we've been trying to fight for 5 years. That's a longer term risk, not a near term risk. A more near-term risk is stuff like what the information is reporting. That Oracle-linked borrowing binge worries lenders. So construction loans are famous for getting rug pulled. And here they talk about a flood of new debt helping build data centers, debt-backed maturity facilities, construction lending. Here it is. Construction lending could become a bottleneck. If stocks keep falling, which fortunately right now under this Hassett news, they're pumping. But if stocks return to a falling sort of theme, like Oracle. Look at Oracle's movement. Straight down since we reported on it. I mean, we talked about this in the Alpha report too. We analyzed this on this channel. We analyzed Oracle on earnings day right here. It's down almost half now. It's down like 45% or something like that. Because we looked at the financials, we're like, this is a terrible balance sheet. This is not good. And as soon as the construction lenders wake up and realize, oh my gosh, we are lending into a bubble, they stop lending. The private credit liquidity concerns don't help. And unfortunately, it likely aggravates the sell-off that we've seen over the last 3 weeks. So hopefully not. Hopefully not. Hopefully we could maintain a nice bounce here. I would like to see my test, okay? I would like to see AMD hold 200. Otherwise, Google is going to do the same thing that AMD did here. That's a real risk factor. That you get Google rocket like this, just like AMD did when people got excited that it's the next NVIDIA, and then it just curves right back down. That is a risk factor for markets. Another risk factor for markets is that you get an end of the day sell-off, or even tomorrow morning sell-off on NVIDIA. We get back to 164 on NVIDIA, and that drives down the likes of Supermicro, Vertiv, Dell, CoreWeave, IREN, the whole stack. And that's when people get nervous about lending. So IREN stabilizing here above the 100 DMA, fine. It's still just back to September pricing, right? But if IREN races and we fall back down to the 200 DMA, which is the $23 level, which it probably will if this cycle continues of liquidity concerns, then lending is going to seize up very quickly. And that's, pay attention to lending seizing up. If you want a red flag for when to run for the cover or run for the exit, look for articles that start coming out talking about lending seizing up. We're not there yet. See, construction lending could become a bottleneck. Who's a big construction lender? Oh, they said it in here. Let me find it. JP Morgan. There it is. See? Developers have outlined plans this year for data centers, quadrupling from last year, according to JP Morgan. Here, there it is. Construction loans made to developers working with Oracle are JP Morgan and Japan's Sumitomo Mitsui. Okay? So what happens when JP Morgan rug pulls? Just go back to the day Charlie Kirk died. Tricolor collapses because JP Morgan rug pulls a $700 million line of credit. When we talked about this earlier in our live stream, you know what people told me that Jamie Dimon was? They said Jamie Dimon is basically like, because he's warning everybody about cockroaches, right? Well, people told me that this is Jamie Dimon, leaked footage right here of Jamie Dimon from Men in Black. Will Smith encounters Jamie Dimon, who ends up wearing a normal person's clothes, and he's actually just a giant cockroach. It's exceptionally disgusting. And even Will Smith is like, yo, what the hell? You were the scammer all along? Dog. Yeah, the O-face. Yeah, those are the warnings to watch for. JP Morgan moves from rug pulling private credit and auto lenders to rug pulling the data centers. When that starts happening, it's over. Because you're even seeing it here. Look, one of the 3 major rating agencies. Now, it doesn't matter because right now everything is fine because the rating agencies have decided, you know what, we're going to use smaller rating agencies. We don't need to use one of the big rating agencies. We'll use the smaller rating agencies. Last week warned that large cloud contracts from AI companies, including OpenAI, are causing heightened customer concentration and counterparty risk for debt investors. Fitch is literally sending up the warning flags. That's not good. That's not good. That's not good. Once that rolls over, it's bad. Now, somebody left this facetious comment yesterday. I think they were just poking fun at me. They're like, Kevin, you know, you're warning about this like AI bubble and chips, but you're talking about launching this AI app for house hack, and it's true. But to me, those things are different. Of course, I feel that way. Oh, look, this is cool. Look at this. Look at this beautiful picture. So this is our like an example of what we're working is scoring properties with labels. And so we actually think, you know, we're not investing in data centers or like, you know, what I think is the bubbly part. We're looking for actual productivity where we could say over time, hey, you know, here's an app where if you're looking for real estate in whatever zip code or whatever you're looking in, you're able to find a deal based on how much it changes your net worth, right? That's the goal, is that it shows you, hey, here's a deal that's a bad deal. It's minus $90,000 of your net worth. Here's a deal that's a good deal. It could increase your net worth by $150,000 or whatever. And, you know, here's just an example of what we're building out, right? Like avoid the deal, you know, good deal, fair deal, whatever, right? Like those are the things that, you know, I think is part of the future of productivity, of how people can actually build wealth. And I'm not trying to shill the startup house hack. You know, we're just now working on redesigning our website to put some more colors in or some more designs in for our AI, which I'm really excited about because we're going to launch that AI service. But to me, it's just a tool that we've been using for years on like how we prioritize deals, and we can now nationwide look for deals in any zip code and go, all right, well, instead of looking at 100 listings in every area, we're going to prioritize by the zip code, and it'll guide us. Like, to me, that's actual productivity AI, and everybody knows that AI has been a boost to people's productivity. There's no question about that. The problem is, at what point have we overbuilt data centers by commoditizing LLMs and not just like productive AI products that actually help us unlock more time in our day? Those are great. You know, that's the next phase of AI. We think we're on the next frontier of AI. Okay, where are companies that are actually generating value, right? But the data center boom has real risks. And the fact that Fitch is now warning, hey, you know, JP Morgan's lending into a bubble, it's just going to be a matter of time before the cockroach Jamie Dimon turns around and says, yeah, you know what? We're done lending to data centers. And if Jamie Dimon stops lending to data centers, do you think the smaller lenders are going to lend to the data centers? That's the oopsie doopsies. So anyway, Somebody here in the chats writes, soft landing maybe? Well, that's the hope. See, my hope is that we can soft land. We soft land in 26 and our house hack AI blows up and then we can IPO at the beginning of 27. Obviously, no guarantees. It's not a solicitation. Read the disclosures at househack.com or whatever. But that's my hope and my dream. I don't want a recession, but I'm also very well aware that we are a teeter-totter away from recession. That's why we don't have any debt. No bank debt at the company. I don't have any personal debt. And I think it's wise to be cautiously optimistic in this this macro world that we're in. Hasset's good for like shill, run the printer. That's good. And it's led to a nice pump in the stock market today. But is it going to be enough, or is it going to be too little too late? Look at what's doing really well right now, Mortgage Place. Guess who's been bullish? Mortgage Place. I have a list of top 10 stocks to buy over the next 10 years in our alpha report that you can get over at meetkevin.com. And let's just say Rocket Mortgage might be one of them. Anyway, we're also, it's not on the website yet, but we're releasing a 9th course, by the way. It is going to be totally included. Maybe we can get that beamed up now, just so you can see the teaser of it. Also, post MK website. Anyway, so yeah, it'd be nice to show that because it's going to be a 9th course. It's going to be totally free for existing members. Anybody in the Meet Kevin membership, that'll be totally free, which I think is very cool. So yeah, there you have it. All right, let's see what we got over here.
Can turn that around quickly. My mom was regaling me with her time as a TWA flight attendant in the 70s, and people used to dress up. I mean, you were in full heels and a whole thing. So the slippers gotta go. Yeah. What do you guys think?
So I already liked Sean Duffy, but I like him so much now after this. This speaks to the dad in me. Like, my whole existence in my house is trying to promote civility, like saying please and thank you, not wearing pajamas everywhere. So he's trying to do that on a national scale. That's a pretty tough job. But I do think, okay, so you think about the broken windows theory of policing, right? You fix small things and it prevents bigger things. I do think if people dressed up just a little bit, if they did the little things like please and thank you, it would go a long way to make traveling way better than it is right now.
What about athleisure? Because I do like to be comfortable on a plane. I'm not going to wear heels and tights or even jeans. Sometimes can be uncomfortable on a plane. I get this, don't wear pajamas. And I have actually seen people in footsie pajamas. So that's taking it to a
like the little kid kind, but for adults.
Why are we talking about pajamas? This is so dumb. Sorry, I got distracted for a second. I don't know why I got distracted. But I gotta change the channel. I don't really want to change the channel, but I'm gonna change the channel. Okay, let's go over here.
The only
Alright, what do we got over here?
But yes, they still have, a tough road to head. And what's helping them on the cash side is their inventories are lower year over year, and that's helping to boost their cash position.
Okay, so they're managing their inventory, which is what all retailers aim to do, but especially those that are struggling to put a turnaround plan in place. The interim CEO, Michael Bender, was named the permanent CEO. How much credit does he deserve for this latest results?
Well, when you think about it, he's doing blocking and tackling here. He basically brought back private brands because that's what really resonated with their customer. And that mix is also helping their margin at the same time, which is helping to offset any effects from tariffs. Although they do see some headwinds early in 2026 from those tariffs because private brands are becoming a bigger piece of their sales now that they've brought it back. But they're resonating and they're seeing strong increases in those private brand sales. So that's really helping because those are the open price points that their low income consumer has been looking for.
All right.
So it's really resonating, and that's why you're seeing the strength there.
Appreciate it. Thank you so much. Mary Ross Gilbert is Bloomberg Intelligence's senior retail equity analyst. Now let's stay.
What do you think, Kevin? Pajamas on plane or no? I don't honestly care. I think people should be comfortable on a plane. I do think that it's really important for people to wear their shoes for takeoff and landing. I think people get too comfortable too fast. And, if you need to, if there's a failure at takeoff, certainly, or landing, and you need to ditch that plane fast, like the Air India guy who steps out of the crack, right? You didn't want your shoes. So that's all I really have to say about that. I mean, it's an odds thing, right? As with everything. But let's see here. It's amazing how many people take their shoes off during takeoff. That's not a good idea. You know what I've never done is flown a plane with flip-flops. Always shoes. You need tight shoes. You don't want to get stuck on the pedals. Anyway, so, well, look at that. Q's right on 607. Will lending pull back from AI torpedo? What? From AI? Or will facilitation? Yeah, I mean, this is what we've always said, Cody, is that, if we end up having a recession, rates come down very, very quickly. And the mortgage plays, they could be hurt in the short term by just indiscriminate selling across the stock market. But in the long term, the mortgage plays will be glorious because people will want to take equity out of their homes. Because, I mean, this is kind of like a little crystal ball-y here, but I'm gonna do it anyway. So let me write it. Let's see here. All right. So why is this stupid keyboard not working? It's fine. Sometimes technology just doesn't want to cooperate, and it's fine. It's fine, honestly. It's fine. All right. Here we go. So, Kevin's crystal ball. Oh my God, what the hell? What is going on with these keyboards today? Hold on. Okay. So, jeez, man. All right. There we go. Okay, now it's working. Okay, so Kevin's crystal ball. So Kevin's crystal ball says that if we keep bleeding on jobs, we will have a recession. There will be a recession, which unfortunately will take very long to get out of. Why? Because AI will make hiring very difficult. Okay? That will require much lower rates. Zero and printing. And real estate values, real estate propped up by low debt positions, mostly by older Americans, will become a massive source of refinancing activity to keep people in retirement or spending. So the well of household equity will be tapped. Massive boom for lenders. No. So somebody's asking my home values. I don't see, that's my point, is I actually don't see home values dropping that much, if at all. Home values can actually go up. Home values, ironically, may go up as low rates enable buyers who can still qualify even in recession. I don't see a 2008 foreclosure crisis because you have entirely different lending. The debt cycle is in private credit and AI data centers now, not real estate. Dodd-Frank really kept debt very, very low. So this is the Kevin crystal ball here. I'm purposely labeling it a crystal ball because obviously, you can't know with certainty. But I do think people will refinance their homes, they'll liquidate their 401ks, they'll sell stocks, and the Fed will freak out. They'll try to print money, but people won't hire anyway. The recession scenario sucks. Really sucks. So, you know. Oh, check it out. It's updated now. Look at this. Look at this. All 9 courses, the Meet Kevin membership, all 9 courses is included. So, like, we're literally launching this reinvest course totally for free for existing members. So the thousands of you that are new members or existing members or whatever, you're getting, it's a continuation of Trumponomics, but you're getting all those brand new lectures, a bunch of new content, and it's sort of like updated content. And it's really exciting, and it's all going to drop on December 1st. So I'm pretty excited about that. And that keyboard, okay. Yeah, there we go. Okay, perfect. Excuse me. Let me listen it over here for a moment.
To spend billions on Google's AI chips, showing that Google can rival NVIDIA as a leader in AI tech. Well, Google has already agreed to supply up to 1 million chips to Anthropic, making it even more of a competitor. Google parent Alphabet shares are more than 1% higher. NVIDIA shares now less than 4% lower, trimming back some of the earlier declines. That's moved stocks higher. The S&P 500 now up 0.6%, NASDAQ up 0.3%, the Dow up 1.2%, 10-year Treasury yield at 3.99%, and the 2-year yield at 3.45%. And we can tell you that White House National Economic Council Director Kevin Hassett is seen as the front runner to be the next Fed chair. That's according to people familiar with the matter. Hassett is viewed as someone who could bring President Trump's approach to interest rate cutting to the Fed. That's something President Trump has been wanting to control for some time now. Sales at U.S. retailers and restaurants did increase modestly in September. Resilient consumers moderated their spending after they splurged over the summer. And payroll processor ADP released its weekly measure of hiring, finding that companies cut an average of 13,500 jobs a week in the 4 weeks ending November 8th. That report may be a sign that hiring has slowed since September. Money markets are pricing in about an 80% chance of a Fed rate cut in December after some dovish remarks from policymakers signaling support for the labor market. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. It's Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Amy Morris on the markets, and she'll have more in about 20 minutes' time as we try to connect the dots every day here on Balance of Power between Washington and Wall Street. Thanks for joining us on the Tuesday edition here on Bloomberg TV and radio with big news. It hit the terminal right at high noon, the redhead, and one that may not come as a surprise to you because he's been on the short list for so long. We can tell you he's at the top of that list. Kevin Hassett, of course, one of the president's top economic advisors, going back to the first administration. Now, according to Bloomberg's Nancy Cook, at the top of the short list to become the next chair of the Federal Reserve, a job he was asked about recently when he sat down with David Rubenstein for his program Peer to Peer on Bloomberg. They spoke at the Economic Club in Washington. Listen.
For me, I think that being director of the National Economic Council is my dream job. And if the president asks me to be Fed chair, then I'll do it. But
is it true that fire in the cabin is a pilot's worst nightmare? Yeah, dude, you're screwed. What are you supposed to do? I mean, like, I could fly a plane without an engine, you know, for some period of time. But if you're on fire, you're literally screwed. I mean, you're basically a floating fuel tanker. You know, you smoke out or you're on fire, you're probably dead. It's not good.
Internally, he is viewed by Trump aides as someone who is campaigning heavily for the job. But also, I think Trump is high on him. They had a few meetings in June, which we reported on, that went quite well. And I think that He was really, has been a favorite for a while now. And, he has the added value of also having proximity. He's in the White House all the time as the National Economic Council head. And, he's around Trump all the time. He is going on TV constantly to deliver the White House's economic message. So I think that proximity really matters to Trump.
Is he also the path of least resistance to lower interest rates?
Somebody says fire anywhere. So well, yeah, I mean, of course. But like fire in a house, ideally you could walk outside. Or you have fire sprinklers. You don't have fire sprinklers inside of a plane. You have them on the engines as far as, that functions for your fire extinguisher model. On a boat, you go jump into the water unless you're trapped. In a car, you pull over and get out. Hopefully you could get out, unless you have Tesla doors, then you're dead. But don't sue me, Tesla. It's a joke. It's a joke. Okay? It's a joke. Okay, just like this. I love Sarah. It's a joke.
Welcome. Nice to have you. So you want to talk about lovemaking, right?
It's a joke. I'm married.
He was on CNN on Sunday morning. He did that, the DC Economic Club. He is appearing at a Wall Street Journal CEO Summit in early December. He is really making the rounds and not just doing sort of quick TV hits, but also doing more extended interviews where he's giving his thoughts on a range of policies, inflation, the Fed, all the things that, tariffs, all the things that are a key part of Trump's economic agenda.
He has said frequently, President Trump has said frequently in speeches and in public events recently that Scott Bessent was actually his preferred candidate. He's even pointed him out, said, Scott, I wanted you, but Bessent likes the idea, likes the job of being Treasury Secretary. Is any of that true, or is he just playing with people?
No, I mean, what he is telling people privately, according to my sources, is that, he wouldn't mind Bessent doing both jobs, Treasury Secretary and Fed Chair. And I don't think that he's totally dropped that idea. That's not something that Bessent wants. And Bessent has told Trump that, several times.
Interesting.
And so one thing that I'm looking for is there an 11th hour plot twist where Trump just gives Bessent both jobs? Or does he go with Hassett?
Well, so what do we need to get through next? There are a few remaining hurdles, as you've been reporting. It's time for the finalist interviews next.
Yeah, so Scott Bessent has finished his interviews. And what happens next is that the Chief of Staff, Susie Wiles, and Vice President J.D. Vance are going to do some of the interviews. To the people that progress. And then then people will meet with Trump. Scott Bessent is not going to recommend someone. Secretary Mnuchin did that during the first term. He recommended Powell, and I think definitely came to regret it. And that is one of Trump's big regrets from the first term. Scott Bessent has learned from that, and he's not going to do that. But so the next steps are, some interviews with some top aides of Vice President, and then Trump.
Jay Powell, all the while, is hanging out watching the news, has a resignation letter handy. Does what next?
Jay Powell is hanging in at the Fed, and I think just trying to keep his head down.
He'll leave after his term. I don't think he's going to stay. He'll follow the tradition and he'll leave.
There'll be a final interview then with President Trump. Does he put all three or however many in front of him, like The Apprentice? They all get a one-on-one. How is that going to work? He could sell tickets to this.
He could. I mean, so we know how he did it the first term. And so the first term he met with people individually. And so I assume that that's going to be the case here, where he'll meet with people, and he does know these people, or he knows some of them. He knows Kevin Warsh because he interviewed him the first time. Kevin Warsh also was down in Palm Beach during the transition. He talked to him also for the Treasury Secretary job. He knows Kevin Hassett. And then some of the other people like Fed Governor Chris Waller, he would need to meet with him and see what he thinks. There's some other people in the mix.
Really interesting. We've got a 3 handle on the 10-year. I know you're not a market analyst, Nancy, but you kind of move the market with this report today. That would suggest that if it's Kevin Hassett or maybe anyone else on the short list, you're going to have lower interest rates?
I think that people think that if Kevin Hassett is there, he will push for the rate cuts that Trump wants. He is very much in line with the Trump agenda and following that.
Okay. Are the Rick Reeders and all the others from outside the admin still on the list, or are we whittling this down?
I think that Hassett is really the front runner.
Got it. Great reporting today. Nancy, thank you, as always.
Thanks so much.
The great Nancy Cook with us here in studio. Everybody's picked.
No, I think that's well said. All right. Let's see here. All right. So let's go see what else we have here. We have, wow, that's very bizarre. Why is Ben Shapiro like this in a thumbnail? I don't know how I feel about Ben Shapiro being like that in a thumbnail. Is this like a Grindr review video? Huh. Alright. What is this? Okay. 10-2 yield spread. Up. We've got... Burn it down to Funky Town. Haha, what is this? AI fears overblown a short term. Our offshoring is the greater challenge for Americans. Good paying jobs moved overseas. Okay. So, let's explain how this works. Okay. So let's bring out my little recession crystal ball. And let's answer your question. Okay. Offshoring. Regarding offshoring, okay. Yes, this will keep happening, okay? So, how do home prices keep going up, okay? I'm not saying home prices will keep going up. I'm saying, and I've always said this, home prices in some areas will keep going up. I've always said that. Those of you who watch this channel know this, okay? You should already know which ones. Obviously mine. No, really. Where do home prices go up? Economically vital regions, low build, high growth regions, and this is primarily blue. I hate to say it, but it's true. And I mean, just broadly, you know, this would be high jobs, like job concentration. And then I would say higher income. Okay. So I hate to say that, but that's typically what happens. So home prices keep going up in the higher income areas, the low build blue areas, and economically vital regions, the centers of job creation. Okay? So these are going to be, in my opinion, New York. Mamdani will make it worse. Okay? California, coastal. I should say coastal California. Because inland California is a different animal. You know, probably Chicago is probably in there. And then Northeast, like Boston, you know, etc. likely. And that's typically what you find. The investment boom, like, you know, Cardone, Sunbelt, BS was way overdone. Way overdone. But Cardone is a trend follower, not setter. You know, that's why he's getting into Bitcoin late. You know, oh, let's, you know, the Gary thing is marketing. Gary is just a marketing puppet. That's all it really is. And we know he's a good marketer. We'll give him that. But that's the answer to your $10 question. Now, if you want to ask another, it'll be 20. I'm just kidding. I appreciate it. Thank you. Sonny said, Richmond, Virginia house. Yeah. So, Sonny says, please add gold 5,000 to your crystal ball. Okay. Yeah, I don't actually disagree with that. Gold 5,000. Gold 5,000 is definitely possible just before peak recession fears. Once we hit despair, though, everything gets sold. So, yeah, that's my take. So that's why I also say, like, you know, diversify. This is the opportunity. The opportunity to diversify is now. I'm not trying to, like, shill house hack or reinvest or whatever. Obviously, if you want to invest in that, you know, you could consider that. But no, you really gotta. We are so in the stock market concentrated right now around this loan-fueled AI boom. That concentration is a major risk. And you see the JP Morgan warning even just this morning, right? So you want to pay attention to that. Somebody says, I think there will be a rotation out of the Qs and into consumer staples. I agree that if we soft land, consumer stocks will do well. If we soft land, the restaurant stocks look great right now. Okay, look at this. Go out on the week chart. Look at this. This is the week chart for Cheesecake Factory. Okay, look at Red Robin Gourmet Burgers. That's the week chart for Red Robin. Look at, Dave & Buster's. Week chart for Dave & Buster's. Look at the week chart on Chipotle. Straight down. These are week charts, not the day charts, the week charts. It's a long-ass downtrend. So yeah, dude, you're not wrong. If we soft land, all these, you could sell all your AI stuff right now. If you think we're going to soft land, sell all your AI crap right now. Go buy Dave & Buster's, Chipotle, Red Robin, Cheesecake, and you'll probably outperform all the AI. Crazy. That's if we soft land, right? Yeah, somebody says, turns out charging $64 for a hamburger is not a good business model. I know, dude. Yeah, they had an A1 steak burger at Red Robin. It was $19. $19. I was pissed. You know what somebody says, what do you think about syndications? I hate syndications because of the fees. Pay 30% on the upside, the asset management fees, the lending fees, the construction fees is bullcrap, man, the amount of fees in there. But anyway, I heard Carl's Jr. has good deals on hamburgers right now. What I might do, tell me if you want me to do this, I will go drive to Carl's Jr. and we'll have to do a price review video because $19 for a burger at Red Robin is just like scamorama, okay? And then they're like, oh, but it's bottomless fries. Yeah, well, how often are you going to get your ass over here and actually give me another tray of fries? I'm not limited by the fact that the fries are bottomless. I'm limited by your bum not walking over here and offering me more fries. So technically, they're not bottomless. Technically, that's a scam. Anyway. So, is Wingstop another? Let's see how Wing's doing. Yeah, Wingstop's not doing great either, I mean, I know today it's good. These stocks are up today. That's fine. But people say do it for the burger or do it for the people. Let me see. I think I have an image for the people here. Let me see if I have an image. Photos. Let's see. Where's my image? The image for the people. Do I have it? Did I not take a picture of the receipt with my Meta glasses? That's crazy. I have the menu right here. Customize your burger, A1 burger, add. Yeah, anyway, they're like $19. Darn. I thought I'd take a picture. It was good. I was teaching Jack about smiling burgers. See, this is a sad burger. And so you have to take the burger and you have to take that's a sad burger. That's a bad burger. And then the smiling burger is like when you push it down a little bit and it like smiles at you. That was my Meta glasses demonstration. Yeah, it was good though. No, I will give him credit. It was good. All right. Just disappointed I don't have a clearer picture of the menu. This is the clearest picture I have of the menu. And you can kind of see over here. Boneless chicken bites, $15. Bone and wings, $16. Bro, these are crazy prices, man. The appetizers are like $12 at Red Robin, bro. It's Red Robin. It shouldn't be that expensive. Oh well. Oh well. So what else? So we talked about the consumer stocks. Tesla's bobbing above. We're right at 200 on AMD, which is clutch. We're 418 on Tess. Goog's here. And right at 607 on the Qs. My goodness. All right, let's go see. Okay, what else here? Oh, that's good. Okay, good. Oh, is it working? Oh, yeah, no, not yet. Okay. Okay. So anyway, what else? What else is going on? Doesn't look like that's functioning yet. Let me see if I can fix that. All right. Let's see what else we have. Oh, here we go.
What's the takeaway, and what does this mean for rates next week or 2 weeks?
Well, a bit of older data, but as I've said, old data is better than no data. I think what it does is it sets or reduces the expectation for both third quarter growth a bit because of that miss on the retail side, and it sets the expectation or the level that we expect consumer spending a little bit lower for the fourth quarter as well. There are things to work out, as you know, Dom, including the economic impact of the shutdown that's supposed to be a negative for the quarter it happened in, and then maybe you get it back in the next quarter. So a bit of shuffling around of GDP between the quarters there. I think the expectation here is that the Fed is on track, in part because of the weakness we're seeing, both in the consumer confidence data as well as in the retail sales data, on track to cut rates because of concern about weakness more than they're concerned about inflation.
All right, so that is the kind of tipping point right now that we're dealing with the scales. Dana, is the inflation the bigger threat, or is the slowing jobs market the bigger threat? It seems as though the conventional wisdom consensus has become the weakening job market matters more. So how does that factor in to the consumer confidence data we just got from the Conference Board?
Well, I think that sentiment that labor market data matter more was certainly underpinned in our consumer confidence measure for November. More people said that jobs are hard to get.
Let's keep going.
World, and from the Chinese perspective, he is. I think it's much better when he comes here. But anyway.
This lady sounds like Tom Lee.
Yeah, I think he's going to be very focused on trade. Rare earths didn't even come up in this call, or at least there wasn't any mention of it, but that's obviously a huge thing. And basically making the Chinese adhere to the sort of outline of a trade deal that we've already had and have had in place a couple of times now. So they continue, surprise, surprise, to cheat. And I just hope that Trump doesn't get a little bit soft about this because, yes, he really wants them to buy soybeans. What is he going to be willing to give away to make sure that they actually are buying American soybeans? Because that's very important for President Trump. The farming community is turning pretty negative on the president. He needs those votes in the midterms. So I think it's complicated. He wants China to stop buying Russian oil. That's not going to happen. We've already seen that. So I don't know. I just think that the Taiwan issue is very fraught. The foreign intelligence community is already very concerned that Trump is going to somehow soften our already ambiguous position and make it even more ambiguous, i.e., we don't really care. And that would be, I think, catastrophic for the region. And by the way, we suddenly have a very strong ally in Japan.
Well, so can I ask you about that? Yeah. Or I think that's interesting. Okay, so I hear your concerns about Trump going to China. Yeah. And I know you know what China's going to do.
Yes,
you know what they're going to put on the table. You know what they want. That's obvious. And you know you can't trust them. So all that being said, it is interesting to me how much Japan has seemed to turn on a dime with their new prime minister when it comes to Taiwan. I mean, they are not speaking kindly. They are not standing on the sidelines. They're basically saying, this is a national security issue for us in our backyard. We do not want to see this happen, and we're not messing around. So I kind of wonder, and President Trump, I think, gets along very well with this new prime minister in Japan.
So, yeah.
So is President Trump going to China, focusing on trade? Maybe we're all wondering about his view on Taiwan, but he knows he's got a new ally on Taiwan that we've never had before. And he doesn't have to speak so strongly on Taiwan because Japan has said, we're picking up that mantle. I'm just curious because I don't think it's coincidental that you're seeing the Prime Minister of Japan come out so strong on this as Trump's talking about going to China.
Well, it's interesting. I mean, I think what we're probably not as conversant with because we don't live there, Japan or Taiwan has been under constant.
All right. Yeah. Blah, blah, blah. All right, let's see what else is out there. So let's go check out the zeros. Zero hedgers. Take a look at this. Retail traders lost 74 to 89% during every major volatility event. Wow. Is that just an ad by Value Walk? AI Trading Lab has revealed largest longitudinal study of retail trading. After 3 decades, the failure rate has not changed. So, what are they saying with AI? Where's the repetitive 4-phase spiral? Okay. And then what else do we have? Silver market could outshine. You're blaming on prospect. Okay. Grid battery sparks. Zelensky seeks urgent meeting with Trump. $4 fries. Wait, where are $4 fries? But now we're being charged $4.19 for a carton of medium fries? No way, dude. There's no way. There's no way. Hold on. We're going to go find out. We're going to go find out together. Why is it not loading? What's going on? That button. There we go. Okay. Why is it lagging? Is your app this laggy? Oh my gosh. It can't be that bad. It's McDonald's app. Full menu. McDelive. Okay. It's actually, for McDonald's, it's actually kind of slow. Alright. So, what would it be under? Shareables? Probably shareables, right? Hold on. Shareables. No. View full menu. Condiment, sweet, beverage, hash browns and sides. What the heck? Extra value meal. Bro, I just want fries! It's probably because it's breakfast. I can't do this right now. Whatever. Alright. French fries. $4.19 for fries. Labor market continues to get weaker, so we're being hit with much higher prices. At the same time, paychecks are stagnating. Right. It's not good. Okay, we talked about Hassett. The inference era. As I find the topic of Google TPUs extremely important, I'm publishing a comprehensive deep dive. Okay, topics covered. What is the TPU? All right, let's dive into it. Let's see here. This is probably written by AI. Yeah, dude, I swear, this guy literally just AI'd this crap. Yeah, he's got this what's this thing called? The ChatGPT 4-time thingy. Who cares? Key milestones, DPU, general purpose, parallel, domain specific architecture. Well, it's an ASIC. Application specific. You're calling it domain specific. Okay. Fine. Ironwood. Increased high bandwidth memory. Blackwell Ultra. This kind of compares to Blackwell. That is interesting. I do wonder how many articles are just written by, like, especially these long ones. You know, what they probably do, I hate to say it, is they probably just do like a deep research GPT, and then they just copy and paste it. I know I've actually had to stop using the dash because I use it as a comma, you know, tool when I've already used a comma. So I stop using it because I don't want people to think it's GPT. Dick's Sporting Goods closed some Foot Locker stores. Johnson warns White House against expending Obamacare subsidies. Confidence plummets. 6 dead. Missile plummets. Kiev. Blah, 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 blah. All right. Fine. Let's go see... what else? Oh, that looks pretty decent. We're going to have to do some... I'm going to have to do a little bit of... that doesn't look bad. I'm gonna proofread this when I get off here. And I'll probably change some of the wording. But it looks pretty good. Your real estate competitive advantage. Avoid bad deals and prioritize. Yeah, I might say prioritize good deals. But that's okay. This is a pretty good draft. I like this. What you get now. Visual Deal Spotter. Beta access unlocks December of 2025. See the top deals in your zip code ranked by priority, A, B, C, or met with stickers on top of every listing, so you instantly know which are worth your time. Basically, when listings hit the market in your zip code, select 20 zip codes at a time, we'll look at them first with Meet Kevin's trained AI and label them with a ranking. You can then sort by recent or score to prioritize deals. And then, that's cool. And then, of course, we have all the future, yeah, here it is. The future plans, the valuation AI, the renovation AI, the advanced. These are the things I'm really excited about in the future. Custom upload renovation AI. Already own your home and want us to advise your renovation in the most potentially net worth boosting manner? Upload pictures and we'll give you instantaneous, I might change insights to like a guide or like a net worth boost guide or something like that. Material upgrades, this, not that renovations. I got a little, I'll update this a little bit, but this, I think this is pretty cool. Yeah. Okay, cool. So what else do we have? Let's just see if the Doomers have anything. One sec. Okay, cool. So what do the Doomers have? And then I'm going to look for some institutional work too.
Number one, I hope for all members of Congress, but also a political issue for both sides that something needs to be done. I do believe John Thune will give the Democrats their vote on December 10th, as he promised. But going back to your, I don't know, December 10th, maybe that week at some point, whether it's legislation that can actually pass or not, it's the question. And
that's about ACA.
I agree with you, Joe. I think.
All right. Okay, so 25th. What does UBS have for us? UBS. No. TMA. Fed cuts. AI is the only thing that matters. Well, yeah, we know that. Rabobank. Did you get the points? What is this? We have peace plan. Shifting towards Venezuela. Okay, that's fine. Nothing juicy there. Nomura. You know what we should do? We should do like why don't we like finish the recession plan and just put together like what do we think actually does well in a recession, right? Like let's work that now. So we talked about the crystal ball. Keep bleeding jobs, there'll be a recession. I mean, this is a foregone conclusion. Either you keep bleeding jobs because of low hiring, already under, one job opening per unemployed, which is bad, right? 27 weeks unemployed is bad and rising. Labor force participation starting to tick up, also bad for unemployment rate. If I go to labor force participation, St. Louis, Fred, Walmart for the plan. Yeah, Walmart usually does well, but it's already ran so much. It was almost a tech play, right? So ironically, like the labor force participation rate going down has been very good for the rate, like for our unemployment rate coming down. But when you get these tick ups, we're worried that this is going to tick up even more. We're now at we're only at 2 months of up so far, so it's not actually that much of up. Only 2 months up so far, though. Okay. If these continue, there will be a recession, which unfortunately takes very long to get out of. So what do you invest in, right? We talked about AI, we talked about real estate, we talked about home values. See, gold, I think, is like the fear hedge going into recession, but it's offshoring. The problem, with investing in maybe other countries is the idea, problem is where? Problem is where, So you look for, like, no recession play, soft landing. The consumer stocks look dirt cheap. So, really the best always in a recession is cash. But you could also find low valuation real estate, is an option. Low valuation real estate in great areas. So like good deals, right? Wedges, basically. Cash and wedges where you're getting at a discount. Shorting and inverse ETFs is timing, and that's risky. Probably the best is just, reducing debt and margin. Probably a great way to put it. Last 2008 recession, Walmart and McDonald's performed better than others. This idea that you could get a potentially better value, right? Okay. I mean, really, so typically, Mag 7 discounts could be opportune because we don't see the fortresses as going bankrupt. Even a Palantir, right? Is Palantir going to go BK in a recession? No. Where's my button for that? No. So, Palantir, Hood, Apple, Microsoft, Meta, Google, they won't go BK in a recession. You'll get a discount chance to buy, and that could be a generational buying opportunity. All right. So a Mag 7 discount, that could always be a place. People, credit default swaps. Credit default swaps are rocketing because of, in part, hedging against this debt, right? So if you go to CDS, let's see how CoreWeave is looking right now. Let me see here. CoreWeave, trying to find. This is from. Here's Oracle's credit default swap. I'd like to find the CoreWeave one. Maybe what I'll do is I'll pull it up over here. Okay, give me a sec. So we're going to go, let's find out, let's see how the chart's doing. CoreWeave, CDS, USD, seniors. Oh, I had a bunch of different choices here. I guess I'll go grab like the 5. Okay, let me get line chart. Oh, they show nominal values here. This is not very convenient. Also, I don't look up CDSs every day. CoreWeave, CDS, USD. Let's go. Let's try the 10-year maturity. Okay, GP. Come on. Give me what I want. Yeah, all right, whatever. Oh, here we go. Okay, yeah, perfect. So the value of these credit default swaps, it peaked out on the 21st. The CoreWeave CDSs have peaked out on the 21st. That's looking on the daily chart. They have come down a little bit. So you had a little bit of relaxation yesterday. So CDSs relaxed yesterday. Oh, did we lose 607? No, we're right there. You're bouncing on 607. It's okay. You know, losing it into the end of the day would be very bad. I should say triple leveraged would be really bad to be exposed to, right? Triple leveraged. Ponzi exposure. Sorry, STRC. There's really, I mean, I hate to say it, there's little place to hide. Other than cash. Little place to hide. You know, unless you have insulated real estate because you bought, you know, cheaper. It gets tougher. Pawn shops and storage facilities. Storage facilities, that's easy. Or not, I shouldn't say easy. That's interesting. I just don't know how to invest in pawn shops. That's an interesting one. Storage is an idea. The idea of moving, like, I wonder how storage REITs are doing right now. Storage REIT. You know, I think this will probably, if we have a recession, this will be the nail in the coffin for malls. Recession, nail in coffin for malls. So let's look up some storage REITs. I'm running out of coffee again. Okay. So here are some. What is this? Extra Space Storage and Cube. National Storage Alliance. Self. Ugh. Hello, English. Self. Global Self-Storage. Well, that's been trending up, huh? Dividend of 29 cents. Extra Self-Storage. Extra Space Storage. So here's a puppy. What is this? $28 billion. 7 dividend? 6% dividend on Extra Space. Let's see here. Let's pull it up. And then, of course, Public Storage. Yeah, here's Public Storage. Public Storage has a 4.3% dividend. You know, it's not the most expensive right now. How did it do during the last recession, though? Well, let's go find out. I mean, it also went down. I mean, that's the problem. Like, they all go down. We all float down here. Yeah, I mean, they dropped from 53 bucks to 26. They fell 50%, bro. 50%. So, you know, if I go to extra storage, they went from $9 to $3. Yeah, there's no safety here, dude. There's no safety at all. Let's go look at MCD. I think they still fell, but I think they fell less than the others. Well, I can't even find 2008, so that's probably a good sign. Oh, here they are. Yeah, actually, McDonald's did quite well. Look at that. McDonald's was around 42 bucks. They went down to 35. Like, McDonald's barely went down. Ah. Now, what about Walmart? See, the problem is Walmart's become like a tech play now. Walmart in 08, you went from 14 to like 8. I mean, yeah, you still had a big hit at Walmart. Huh. Ah, that's interesting. That's why it's like, you look at those recessions as like generational buying opportunities though, because, you know, I mean, look at that. You know, if you bought it after the recession here for years, you know, you'd be way up money, right? So like, that's one of the benefits of a recession is you get to buy these like generational buying opportunities. Cheap. So, you know, it's just you have to stay away from, like, the 80, 70, 80% decline is just going to suck on what you have exposure with. So that's why, like, we have that, you know, top 10 list of stocks to buy or whatever. And I've been selling and buying. But why is Publix trending? I've been buying less than I've been selling. $0.89. Publix is trending because lemons are now 89 cents. That's crazy. Yeah, Publix would be nice in California. I actually like, that's one of the things I miss about Florida is Publix. Publix is good. I remember bananas used to be like 19 cents. And that wasn't even that long ago. Like 19 cents a banana. I feel like now it's like also 60 or 70 cents. 6, 7. Anyway. We gotta make that burger review video and then come back for like market close, huh? Maybe that's what we ought to do. But I do think that I mean, like, Costco, let me see how Costco was in 08. Waste management, now there's an idea. Trash collection services. Just a utility, basically, huh? So, waste management. Oh, waste management got hit too. Look at that, 51 bucks. I mean, it was short term, down to 29, but still, you know, that it took you a minute to get back to positive. When life gives you expensive lemons, you squeeze them for all they're worth. Do not call Publix and Albertsons for California people. Publix is so much better. Like, if you've never been to a Publix, you can't even comment. All right. So, we should call it the recession. You know what? Let's have Gemini criticize my recession playbook. And maybe even GPT. Chat. Review this recession playbook and add comments. Do not rewrite what I wrote. I hate it when it does that. You ever notice that? Like, they have these tendency of like, yeah, cool thing, bro. Here, let me rewrite it all. Well, how do I know then what you changed? You want me to go sit there and compare every freaking word of what you wrote? That's annoying. I just want you to know the differences. Or I just want to see what's changed. No, Publix is amazing. Do not bag on Publix. UPS, super low. Well, UPS, you have to be careful, man. The amount of debt they have and pension liability, it wouldn't surprise me that unfortunately UPS one day ends up going bankrupt because of the pension liabilities. And they get bought out by a different company. You know, like DHL or, I don't know, somebody buys them. I'm not saying, like, there won't be UPS trucks anymore. It's just, they need to get rid of the debt. They almost have to go through, like, a chapter, you know, whatever, 11. Publix Deli goes crazy with Mardi Gras wings. Yeah. There's something about the Publix Deli and the sandwiches that you just can't get anywhere else in the world. Okay, so Gemini says, this is a sharp, contrarian playbook that aligns with several emerging data points for late 2025. Oh, glaze me, Gemini. Oh, tell me how great I am. Oh, just give it to me. You know, it's actually, I told GPT once, I put it in the instruction set, criticize me every time I say something. And so, like, I put something in and it'd be like, this is the stupidest thing I've ever heard. And it was very interesting. Lesson is, it makes sense why the AI companies try to glaze you. They want you to keep using the service, right? So, danger. Okay, so it says, danger, long-term unemployed, 27 weeks is a critical signal. When this spikes, this historically signals that skills mismatches are hardening. Now, that's a fancy phrase. So I'll put that. Gemini talks about skills mismatches hardening. Mustaches. Yeah. That's an interesting line. Structural rather than just cyclical problems. Okay, so the 2.0. Previous recessions, companies rehired as demand returned. In this cycle, companies are using the downturn to replace bloated headcount. Right. Oh, they don't actually really go into the idea that it would be harder. Validating fewer humans are needed for the next leg of growth. Okay, yeah. Real estate cycle. Sophisticated take on the lock-in effect. Seniors have record equity, 17 trillion. HELOC utilization has been low for this demographic. Yeah, expect cash out refinance to boom. Yeah. Private credit risk. Okay, we know about that. Mame's proposal to rent freeze. Ironically, choking supply further, keeping prices high for existing free market inventory. I mean, is it just like summarizing my argument here? I mean, it's adding a little bit, but this is a lot of summarization so far. Drop in retail trading volume during a recession. Yes. Refi risk. If rates don't drop fast enough, older Americans can't refinance without blowing up their monthly payments. Well, but then you have to factor in the rate drop, right? So is it not factoring in the rate drop? Commercial real estate. Didn't mention commercial real estate. Yeah, no, commercial real estate didn't only happen. This commercial real estate bubble, that was a problem. This is true. But 2008 also hit residential very hard. Condos and multifamily. Okay, let's now try GP Tizzle. Let's see if it just adds anything interesting. Oh, it's still thinking. Still thinking. Okay. I like that mismatch argument. I want to think about that for a moment. So it talks about skills mismatches hardening. Yeah, basically, people out of workforce may stay out longer as they are misskilled, right? Stuck applying for wrong jobs. Yeah. Okay. Interesting. All right, come on, GP-Tiz. Taking a year and a half here. Oh, large malls will get reamed. I think malls will be done. Like Simon Property Group, bad, man. Simon Property Group, the fact that that's like at all-time highs, I actually think is a good short. Kind of wild. All right, let me see here. Okay. Is it done yet? Almost. It implies it's almost done. All right, we'll check that out in just a sec. Okay. We'll look at the sticks in the meantime. How are we holding up over here? Oracle. It's trying to hold on. Palantir's rising. Okay, well, that's good. CoreWeave. It's up from where it was. Bitcoin. AMDizzle, 200. Tesla.
Lost the lead.
Where's NVIDIA, 3.3, 1.3 on Goog. Still up, though, on 607 here on the Qs. Where's Simon Property? Simon Property Group. This blows my mind. Since 2020. Look at that. Just a wild, wild move. $185. I wonder if it's cheap to short. Let's see how much it costs to short right now. I don't like shorting stuff, but I do wonder what the volatility is on Simon Property Group. And you get like a long dated put. So if you go by, let's go see, volatility right now is mid-range. Yeah, it's actually slightly low. Volatility is slightly low. So if I go buy a put on Simon Property as a recession hedge, go out to like, I don't know, let's go crazy. Let's go January of 2028. It'll cost me, how much is that? $20, a little over 10%. 10 1/3, so 13%. Let me see. If I buy an at-the-money put, 22 divided by 185, cost me 11.8%. And if I go for, oh, sorry, I'm on calls. Okay, there we go. Now it cost me $27 to short it. And there's just not a lot of liquidity in these. So the spreads are huge. So that's trash. Let me go to January 27. Oh, a lot more. Well, I mean, still low, but definitely a lot more puts over here. So I've got 135. Oh, but look at the spreads, man. $3 spread. That's crazy. If I go over here, it tightens a little bit. You know, I could go on like a 160. A 160 put cost me, call it $9. $10. You know, how much is that puppy gonna fall? You know what you ought to do is look at, because I mean it got smashed over here. Let's look at 2008. Here's 2008. So you got smashed in 2008 as well. Dropped like 75%. And let's go look at their financials really quickly. Trump weighing the ouster of Kash Patel. What? I don't like him anymore. I'm going to fire him. Wow. Wow, that's crazy. Trump may fire. Okay. Let's now go. GPT is still thinking this is insane. Simon Property Group. Simon Property Group Investor Relations. Financials. Okay, SEC filings, 10Q. Okay, here's a quarterly. Let's hope, like, in order to short them, you have to hope these people are loaded to the you-know-what in debt. Simon Property Group, 10Q, 11, 20. All right. It's about to be the greatest hedge we have ever seen in years. We have no idea. I mean, the financials could be really strong. Let's go find out. Simon Property Group. Cash flows. So. They had to refinance to take on about $900 million in debt. Then $2 billion in dividends, though. Okay. So we had to take on debt to pay our dividends. Wow, look at the acquisitions, though. Wow. Almost $1 billion in acquisitions. That's impressive. You've got cash provided by operating activities. Well, that's pretty good. It's a lot of depreciation. $1.8 billion in net income? Oh, damn. It's actually pretty good. Oh, yeah, EPS is actually pretty decent. How's the balance sheet, though? So, mortgages and other debts. And then these are investment properties. Where are the current assets? Where's cash? Oh, there it is. $1.5 billion in cash. 800 mil receivable. And then I have accounts payable. Ooh. And losses in unconsolidated. That's confusing. What's cash distributions and losses in unconsolidated at equity? Okay, so that's confusing because these are the bills, but it also includes deferred revenues. 1.6 billion in bills. It's not that bad. You know, they're not that indebted. Just not that much debt mismanagement. It is actually decent. So, like, you really want them to be loaded up in debt. And I don't think you really have that here. They got a lot of cash. And they got decent earnings. That makes it hard. And those earnings are rising, too. 1.6. Well, yeah, because they keep acquiring. Revenue rising through acquisitions. But, you know, their net income's also rising. All right. Damn. Oh, thanks for saying that. Abwin87, this is exactly how a course member live stream analysis happens right here. For those of you who are not members, you get so much more of this financial breakdown in the course member live streams. Thanks, Abwin. Thank you. Thank you very much. Join over at meetkevin.com. Yeah, I mean, we just put the banner up for the new course. It's included. You get it for free. Is buying real estate best in recession and still paying the butt recovery? Well, I mean, yeah, I don't think rents dive. You know, I think more people end up renting, and it depends on the area. And again, that's why I think you want to buy wedge deals, because if prices do compress, if you bought a wedge, hopefully you have some insulation, right? So, but anyway, yeah, you get the reinvest course as well. It's kind of cool. So why is Kash Patel getting the boot? What's let's ask Gemini. Why would Trump want to fire Kash Patel? I heard today he might. All right, let's find out. Oh, did our GP-Tiz ever get back? I don't think it did. Let's see here. Is it still thinking? GP-Tiz. Still pro-evaluating. Bro, it's going to take a year. 15 minutes of recession playbook review. Unbelievable. Likely triggered by a diplomatic embarrassment involving in New Zealand. Growing list of controversies. Recent breaking news. Diplomatic blunder because of his visit to New Zealand. Patel gifted a 3D printed toy-inspired revolvers to senior New Zealand security officials. The items were technically classified as illegal firearms. Officials had to surrender them for destruction. This created an embarrassing international headline, making the administration look unprofessional. Is this true? I guess so. 3D printed guns FBI boss Kash Patel gifted to New Zealand officials were toy-inspired. Were revolvers inspired by Nerf guns. And they were illegal to possess. Okay. Interesting. Then you have misuse of resources, jet and girlfriend scandal. Oh, I saw that stuff. Reportedly authorized the FBI SWAT teams to provide security for his wife at events. Shut up. Oh my gosh, dude. Friction with White House. Reports about Pam Bondi. DOJ having no confidence in him due to his management style. Uh-huh. Yeah, the Charlie Kirk communications. Interesting. There's a lot of drama, honestly. Wow. All right, somebody says go look at Costco during 2008. Okay, fine, I will. Costco. Yeah, it's actually not that bad. Let's see Costco right here. So what do you got? December 200 to January 184. That's low, dude. That's barely a drop, man. Oh, did I say wife? Yeah, I meant girlfriend. Sorry. Wow. Somebody says it sounds like a lot of BS. Yeah, no kidding. Okay. Cool. What else? So, Bitcoin's slipping, but I don't think the Qs care. Qs are right at 607. 607. Yeah, still right at 607. All right, listen over here.
You know, competitor, partner, you know, there's somewhere in between is probably the right answer, and that's a horrible answer, but, you know, look at the numbers, look at the money. Which company is the greatest recipient of Google's CapEx, right? Google, the new chip champion, as we've discovered today. Who do they give the most money to in terms of CapEx?
NVIDIA.
NVIDIA, right. Why would they be doing that if they have everything they need and everything they want? The answer is they don't, right? The answer is it's more complicated. The answer is AI isn't one specific workload. If it was just one specific set of work, then doing what Google does would be the only answer, right? A specific chip for a fixed purpose that's never going anywhere. The answer is it's more complicated than that. Things are changing quickly. You need to back as many horses as you possibly can.
You mentioned a report. The report that we're talking about is the information reporting that Meta Platforms was in discussions to use Google TPUs in its data centers in 2027. Tensor Processing Unit, TPU. Explain exactly what that is.
Okay, a tensor processing unit started life about 10 years ago. It is what's called an accelerator, right?
Oh,
the
was that
answer
18?
is, instead of using what Intel provides, which is a CPU, central processor unit, which is a generalist chip, does lots of different things. You say, this is a fixed workload that this CPU isn't very good at. Maybe if we made a specific purpose chip that just speeds that particular workload up, and back in those days it was search, then maybe we get a better result from our system as a whole. The use of NVIDIA.
Oh, yeah, no, okay. Yeah, there we go. 2008. Good catch. 2008. We went from, what, 50 to about 30? Briefly lower.
AI workloads, which is making sense of this massive amount of data and focusing in on creating results and generating pictures or whatever it is that you want to particularly make out of AI. And that's been, they were early to see that and they were early to react to that. So they're enjoying the benefits.
All right, so everybody's a little crazy. Last question here, Ian. It just does feel like, as you said, all of a sudden it's like, wow, look at what Google can do. And it's like the only thing it feels like people can talk about in the market today. I don't know. What is your takeaway? And we often ask this in your expertise of following the chip industry for a long time and understanding development cycles, players who are number one and then they're not number one anymore. So I don't know. Is there something to kind of pull away from this?
I think so. I mean, you have to look, if you want to use history as a guide, then why did Intel lose its edge? Why did some of the GPU companies that were bigger than NVIDIA lose their edge? And it's the pace of innovation that wins. You make the best chip.
All right, we'll come back later. Maybe